दीपक, 1 मिनट
सर।
ये माचर इंट्रोडक्शन कौन कौन किसका कर रहे हैं?
माचर सर, माचर राव अपना प्रसन्ना सर का कर रहे हैं सर।
हाँ,
एंड अपने स्पीकर का मैं भी, आप जैसा भी है, नो इशू।
आप कर दो,
ठीक है।
स्पीकर का आप कर दो। और नरेश भाई आए थे तो नरेश भाई को ओपनिंग रिमार्क्स देंगे। दया कुछ एजुकेशन मिनिस्टर वो सेक्रेटरी के साथ बैठे से।
ओके।
आज लाइट नहीं है।
आपके पास पावर नहीं है उधर?
नहीं, आपके पास चैतन्य आ गया ना। गुड इवनिंग चैतन्य, you have to unmute Chaitanya.
Good evening, sir.
Very good. How are you?
I'm good, sir. Thank you.
Thanks for coming, Chaitanya. We have Deepak Ladda, Secretary, Hyderabad branch.
Yes, sir.
Yeah, he was here till now, and our Naresh Geli sir needs no introduction.
Absolutely, sir. Sir is the ex officio member of our branch. So
yeah, he is the permanent member.
Yes, sir.
And Prasanna Kumar is also coming.
Okay, sir.
Okay, and he'll just give the inaugural address, and then
Yes,
you'll take it over.
Sure, sure.
How are the cases in Tirupati?
They are quite on the rise, sir.
On the rise, huh?
Yeah. Andhra Pradesh is the third largest.
Yeah, why suddenly it started in Andhra Pradesh? Yeah. Earlier it was good, no?
There is no particular reason, sir. It's normally on the rise, and people are a little lethargic. They are not very compliant with the provision. So Andhra Pradesh in the entire state. Good evening, sir.
This is Deepak Ladda, Secretary
Yes,
of
sir,
Hyderabad branch.
Yes, thank you.
अभी इंट्रोड्यूस कर दिया मैं आपके फोटो को.
How are you, sir? Everything fine?
All good, sir. All good, sir. All good.
Blessed to stay in Tirupati.
Yes, sir. Truly.
Lord Venkateshwara died.
True, sir. True, sir.
It's one of my favorite places.
Yes,
my favorite destination.
Correct.
You also get a benefit of being at a hill station as well as having the blessings.
True, sir. True, sir.
We have another 11 minutes, sir.
Chaitanya, I given the power of screen sharing, and this is also live on YouTube.
Okay, sir.
Already 3 people were watching.
Okay, sir. I'll try and end my session by 7:50, sir. The last 10 minutes, we can have question answer session.
Yeah,
and if
10 to 15 minutes will give, Chaitanya, because too many doubts will be there.
Sure.
Okay. So,
I'm worried, like we have not received the utility for filing the returns for companies and firms still.
Absolutely,
What will
absolutely.
happen to due date?
Yes, sir. Yes, sir. True, sir. And in the finance bill, they still say that the due date is 31st of October only.
True,
So,
true.
I don't know. Yeah, how can we call them as a government when every time whatever they want to do, they don't want to lose interest?
yes. Yes.
It's a very surprising thing.
Firms are ready, but they cannot file, and we have to pay they are saying you self-assess and pay the tax to save 230 for ABC.
Of all the businessmen in the world, government is most commercial, sir.
Yeah, I think at least some other people are better than government here.
Government. Yes.
Could not do shaving in the morning. Sir, you are very looking smart today, Pankaj sir.
No, Chaitanya's power is reflected on
Good evening, sir. Macharao, sir.
Machara, sir.
Good evening, Vice Chairman sir. Anna,
Sir,
Unmute,
sir,
audible
unmute.
లేదు.
మాకు మీ మాటలు వినాలనుందన్న చాలా కోరిక మీరు ఇట్లా
Yes, sir. Good evening all, and Chaitanya, welcome to Hyderabad
Thank you, sir. Thank you, sir.
on the screen.
Thanks, sir.
virtual welcome to Hyderabad.
Welcome to Hyderabad.
Achha, Deva is also
Joining.
actually he was with Education Secretary, but just now he said rushing to office.
Okay.
So maybe he'll join. Another 8 minutes, no? So 7 minutes.
Chaitanya sir, you are invited for our centennial celebrations of 100 programs from tomorrow
Oh, okay, sir.
for
Thank
next 5 days, 96 to 100.
you. Excellent.
So please take out your time to attend the seminar,
Sure.
sir.
Sure.
Please join with us, sir.
Definitely, sir. Thanks a lot.
How is it, sir? Palun Kumar, sir.
Bonner, sir.
Vanara.
Prasanna call చేయాలనా మాచర్
Better గా sir. Time అయిపోయింది కదా.
జస్ట్ ఇంకా 2-3 minutes ఆగి చేస్తా. మహేందర్ రెడ్డి సార్ నమస్కారం సార్. మతేష్ రెడ్డి గారు నమస్కారం. ఇంకా అవర్ పాస్ భాస్కర్ బైరా హాయ్. You have 2 past chairmen in the attendees.
Great, sir.
మహేందర్ రెడ్డి సార్ అయితే ఎగ్జాంపుల్ బస్ మోటివేషన్ ఫర్ అస్.
And Matesh Reddy, sir, also.
మతేష్ రెడ్డి సార్ కూడా వచ్చారు.
Thank you.
మతేష్ రెడ్డి యంగ్ అండ్ డైనమిక్.
Thanks
Sir,
for.
Naresh Gilli sir has joined. I think we can. He's
I talked to him. Don't worry.
Okay.
I have done that. Don't worry.
Participant list.
They come. So we'll start the session at sharp 6 o'clock. The speaker has come. gentle. No problem, boss. అరే మాకు కూడా ఉండాలి కదా ఏదో రిమైండ్ చేస్తున్నామని. రైట్ రైట్. థ్యాంక్ యూ. Prasanna sir is joining. There's एक बार. I was wondering suddenly why the light has increased in my laptop. Now I got the reason. Welcome, hearty welcome, Central Council member, sir.
Thank you so much.
Virtual welcome to Hyderabad. Thank you very much.
Thank you.
Very
Thank you,
happy,
Pankaj.
Good evening, Prasanna sir.
Daya is telling I'm rushing to the office.
How are you, Deepak?
Fine, sir. How are you, sir?
Fine, going on well.
It is always pleasure to.
Looking you with the beard.
Yes, sir.
Good evening, Prasanna sir.
Macharao. Okay.
Sir, good evening, sir.
From the
Your
office.
smile will make the day, sir, for everyone.
Sir.
मैं actually अभी recording start नहीं हुआ. मैं इनको smiling assassin बोलता हूँ. I told him clearly today in his biodata, he has to say that he is married because Hyderabad branch cannot take the responsibility of people asking his hand in marriage and all. So I told him very clearly.
Prasanna sir.
That also. Deepak, एक बार दया को बोले सर आगे बोलो, उन्होंने भाग के जा रहा. He told me that he will join.
Let's wait 1 or 2 minutes, not a problem, you know.
नहीं बस नहीं. Yeah, he is calling me. बस प्रसन्न भी आ गया. हाँ आ जाओ.
Prasanna sir. Yeah, regarding a time punctuality, for the last almost 80-85 programs, I think we are sharp dot. There is no even single 1 minute late.
Very nice.
2 programs, Machar. One was Chandrasekhar Chitale sir, and one Vamshi, where that YouTube got this thing.
1 minute.
I think, don't worry. The thing is like this, Chaitanya and Prasanna sir.
Yeah.
Sir may also be joining, but very quickly, I will not take much time. I'll just take 1 minute welcoming the members, and I will. Machar Rao will introduce Prasanna sir, and
1 minute.
Sir will give the opening remarks, and then Deepak will introduce Chaitanya. Chaitanya will take over his topic. Only thing is, if Daya joins, Daya might also give a opening remark. Okay. If so, what we'll do is, I think if it is 6 of the wheels, yeah. Right, it's 6 p.m. sharp. So let us start. Hyderabad branch has promised that we'll start the programs come what may. Daniel Sharma has sent me 3 messages, started from Education Secretary office, rushing up everything he has said. But I will take chance and I'll start the meeting and pray that by the time I finish, he'll come. So on behalf of Hyderabad branch of SARC of ICA, and all the managing committee members, it is my privilege, pleasure to welcome CA D. Prasanna Kumar, the most popular leader, the most hardworking member of the institute, and I think one person who is aware of ground and the top realities is CA Prasanna Kumar. Sir, I welcome you to the meeting. I also take it as an opportunity to welcome CA Dhanivas Sharma to the meeting. Prasanna sir,
प्रसन्न सर नमस्कारम।
नमस्कार नमस्कार। आप कैसा हूँ?
मैं एकदम फर्स्ट क्लास हूँ सर। पंकज भाई
and
बढ़िया
Daya
बढ़िया।
bhai,
बढ़िया सर।
yeah, thank you for joining Daya bhai. I welcome you to the meeting. It's a pleasure to see the young and dynamic speaker coming and talking to us. Having young speakers would always come with fresh ideas. So here Chaitanya has come for all of us to share his view on the changes in income tax forms. Welcome Chaitanya to the meeting of Hyderabad branch. I welcome Macharrao Meenavalli, Vice Chairman, Deepak Ladda, Secretary, and the 60 members who have already joined till now. And I'm sure by the time Devi starts his opening remarks and ends it, we are going to score a century. So I would not like to waste much time and straight away hand it over to Devi for his opening remarks. Thank you, Devi.
नहीं
And
पंकज
sorry
भाई
for starting without you.
thank you very much and no that the agreement is real very good that 6 o'clock whether whoever it is we have to start. And most importantly, I would like to call, I cannot say elder brother. Prasanna sir is little senior to my elder brother, but a guide for me to be there in the council and always been a kind of person who has always been taking me through a right path in the discussions and all. So today when Prasanna sir is there, my highest delight is that, I'll welcome him to this webinar because we are trying to do our 100th number, and without Prasanna sir it cannot be there. And more than me today talking will be, we would like to listen to Prasanna sir because of his vast experience. Pankaj bhai, the kind of inputs he is giving today in the council is amazing. And let me record on place it on record the contribution which has been made by Prasanna sir with regards to the examination. Honestly, examination is something which is back end, and most of the people do not know what is happening. But today, the examination process, which is actually converted into a larger number, and today I'll tell you one thing. Most importantly, is that the online evaluation, and most importantly, when we realized in the month of May the exam got postponed, he and Mr. Pramod Boob, who are the backbone of the entire education system or examination system, they have sat restlessly and ensured that the number of location where the students have to write in compliance with the COVID requirements, they doubled the number of examination centers. Can you just imagine that, without any article, we can't even think about, and the kind of focus which is being put in for evaluation, where today, in a couple of years back, people have criticized the kind of things which have been going, but it has been taken so positively that sir has actually contributed. So one is that, and number two, the pattern, honestly, there were three people who were from outstation, four rather. Fifth one was just walk in, walk out. But Prasanna sir continuously sat in Delhi last week rather, I'll say. And Rajendra Kumar sir and I were the three people who were sitting there. But the kind of focus they have put, morning 9 o'clock, the lock opens, and night 12 o'clock, the lock closes. Till that time, Prasanna sir sits. I think we all have to give this kind of, hands-on appreciation to sir, because see, every time we see outside world, but inside world is not seen. And today, looking at Prasanna sir, the kind of motivation he gives is unimaginable. His experience of branch, his experience of region, undoubtedly is giving us a lot of new path. At least for me, I am able to learn. At least for me, I can say I have a elder person in my where I am part of. From the state of Andhra and Telangana put together, he is one person who is able to guide me. I get reminded every time of the old times when AP was united. We had two council members. When even if it is having a little gap, still we are two members who are representing our states. which is giving me a big support because his experience is giving me a lot of value. I do not want to talk about the topic. We would like to listen from Prasanna sir. His experience on the practice side also is amazing, superb rather, I can say. Years of experience of his is going to add value. But today I took the opportunity, rather than giving opening remarks, today I'm talking about Prasanna sir. Only for one reason, that people should get to know the kind of time, energy, and effort which has been put by a council member is unimaginable, and particularly with regards to examination. This examination of November will be a big reform at the institute level. That's the only thing which I can tell you. So, Prasanna sir, welcome to you, and
Thank
giving
you.
your blessings to Hyderabad by your presence will make a whole lot of difference. And Chaitanya, undoubtedly, Pankaj Bhai is a cricket fan. And the most important part is he always believed that the new blood has to come into system and they have to start doing something new. So today, having you and your father's contribution to this entire fraternity always can be remembered, and he continues to contribute even today. So having you today will make whole lot of difference for all of us. I would like to compliment you in advance to making it a grand success, and a beginning and a new process where we'll have Falgun Kumar sir number 2 in action. Thank you very much. Thank you, Macha. Thank you, Deepak.
Thank you, sir.
Thank you. Thereby, Machara, can
Sir.
you quickly introduce, though Prasanna doesn't need any introduction, but this is the first meeting this year when he is coming. So let us introduce him because a lot of new members, young members are coming. Thank you.
Thank you, Chairman, for giving a great opportunity, and it's an honor for me to introduce Prasanna Kumar sir. And very importantly, we are pleasure to see both the dynamic CCMs from both Telugu states who are relentlessly working for the betterment of the profession. Thank you so much for both the CCMs, sir. And regarding a brief profile about Prasanna Kumar sir, is a Bachelor of Zoology from Loyola College, Chennai, and MA Sociology from Venkateswara University, Tirupati. Became a member of Institute in the year 1984. He has been occupying several positions in the affairs of the Institute right from the Sikasa, branch, region, central council. During the student days in the CA course, he was Secretary, Vice Chairman of the Southern India Chartered Accountants Student Association, Chennai in early 80s. And he had made a significant contribution to the student fraternity that time. He served in Visakhapatnam branch as a treasurer, secretary, vice chairman, and chairman of the branch during the years 1998 to 2002. He was a member of Southern India Region Council from the year 2007 to 2016, and he was the chairman of SARC during the year 2013-14. He has been elected as a Central Council member for the period 1922. He is a vice chairman of Committee for Members in Practice, which has tied up with many beneficial schemes for the members like Tally, LIC term insurance, general insurance products, and antivirus softwares. He is also convener of Career Counseling Directorate, which has empowered many CAs as a counselor to propagate CA course among the young members, young students through the branches and regional council. He is a member of all standing committees of ICI and also presiding officer of the Board of Discipline. He spoke in many seminars and conferences organized by the ICI on bank audit, company law, ethical standards, industrial policies, and budget analysis. Most importantly, he's a very, like our Pankaj Bhai, he's a keen follower of sports. Prasanna Kumar sir himself is a volleyball player. He held numerous positions in the sports field. He is at present occupying the positions as General Secretary, Andhra Pradesh Triathlon Association, Vice President, Roller Skating Federation of India, Associate Vice President, Andhra Pradesh Olympic Association. He was the treasurer and coordinator for 4th Asian Youth Volleyball Championship and 13th World Cup under 19 Volleyball Championship, and he was a manager of Indian volleyball team to Qatar. His wife is a homemaker and a sportswoman in college days. His daughter is a MS Electronics from the New York University and working as a multinational company at Hyderabad. His son and daughter both are chartered accountants in practice along with the sir. With a brief introduction, I'm presenting our Central Council member to the next audience. Thank you, sir. Welcome to Hyderabad.
Thank you, Machara. Over to you, Prasanna sir.
Yeah. Respected CA Pankaj Trivedi, the chairman of Hyderabad branch of SARC of ICI, and CA Dayanava Sharma, Central Council member, my colleague in the council, a dynamic leader, CA Machara, the vice chairman, CA Deepak Ladda, the secretary, CA ACS Reddy, FCA, treasurer, CA Rajambal, the Sikasa chairperson, CA Satish Kumar, the member, and CA Bharanarayan Rao, the immediate past chairman, and CA Chanamastan, the regional council member, CA Naresh Gali, regional council member, and CA Chengal Reddy, regional council member. Dear viewers, participants of the program, CA E. Chaitanya, the speaker. Good evening to all of you. I mentioned all these names because one screen we will not be able to see who is present, who is not present. So I address all of them. So I have great pleasure and proud privilege. I feel the proud privilege to participate in this particular webinar organized by Hyderabad branch. As you know, Hyderabad branch is the most active branch among the large branches in the country. If you say take southern India, it was Bangalore. Bangalore was a part of southern region. They are also close to our heart. But Bangalore, in foreground conclusion, in one particular category, the best performance always made by Bangalore. Now Bangalore has been replaced by Hyderabad. Continuously, the performance has increased so much, and you know they are competing at the all India level also, along with the little larger branches like Ramanabad, Indore also. That is the stage they are having it. Chairman after chairman, they are doing a very good job. And the number of programs they are organizing on a variety of topics locally, along with regional council, along with many central council committees, is amazing really. And Pankaj Trivedi, recently I came to know when C.A. Gururaj Acharya was addressing in Guntur, he told me what is the meaning of Trivedi, Dwivedi, all those things. Till then I never knew. I had Trivedi's name. Trivedi is the one, he knows 3 Vedas. So knowing one Veda itself is a very difficult thing, but he is the person by birth itself, you know 3 Vedas. That's all you're telling. True to that one, he is a multifaceted personality. He is the person who is a leader, is the one who carries on everyone with him. That is the greatest. That is the leadership of Pankaj Trivedi. So I really am proud to join hands with him. And you know, in his journey, he's a cricket. He is fond of cricket. In cricket, the main one benchmark is century. Century is a very big benchmark in cricket. So in the same way, now he's heading towards, his journey is towards completing the 100th meeting in his tenure as a chairman. That week, that is going to happen in the current week. And this is the first meeting in the current week towards the journey towards the 100th meeting. So I am fortunate to be the opening batsman here in this week towards this path. So I'm the opening batsman. Ultimately, is going to get 100 end of this week. So thank you, Pankaj, for inviting me on this very good occasion, memorable occasion for me. Thank you. Today, you have got a very good topic of income tax forms. As you know, income tax forms, the government is telling once again and again, they are going to simplify the form. In the form of simplification, to gather more and more information for the purpose of assessment is getting complicated. I don't say it's complicated, more information to be fed into the income tax return. That is where it has got a lot of, so income tax form, we never had a situation where we need to have a separate seminar, webinar, but today there's necessity, where normally we feel, so we 12:30 p.m. I mean 11:30 p.m. also, another half an hour time is there. I'll file the return. Half an hour time is too long a period for filing a return. You cannot do it. You need to have a lot of information to file the return. That's where today's topic is very important. I see E. Chaitanya, he has spoken on the same topic in many other occasions also I've seen. The lucid presentation he made is going to be very useful. I'm sure we are going to benefit out of that one. The friends, just to come to little updates within the short time I have. So, you know, the number of queries have been coming to all the elected members, all of us. So, regarding MEF. So, you know, MEF, when I talk of MEF, I have to speak about Dayana Sharma also. See, Dayana Sharma, you know, the entire electronic platform, the digitization of the ICA, whatever we are doing it. So, whichever the committee is there, Dayana Sharma is a part of that one. So, because a techno-savvy person, she has contributed a lot. SSP, all of us know, self-service portal, all of us are aware. When it was introduced in the month of May 2019, we had a lot of issues. The people got frustrated. I don't know, I don't have a better word to use than frustration. Everyone was frustrated. Why this has been put on? This is a big burden for us. Like that, everyone scolding themselves, scolding every elected representative, and the ICA also. That was the situation that day. It was 3 members, one of them is Dayana Sharma. They bought midnight oil, sat on Saturday, Sunday also, worked with TCS, worked with the in-house team, and saw that everything has put on track by within 8, 10 months. That's a major achievement. The migration was a big challenge. Migration, very, very big challenge, I'm telling you. It was achieved only because the contributed 3 persons, including Dayana Sharma. That is the reason why when the COVID-19 pandemic came, the entire administration came to a standstill. There's no movement. We are confined to our house. But because of SSP, The only problem, SSP, no function was stopped in the entire institute. Be the students, the operations and members of everything was going on as it is. The reason is SSP. That is the contribution made. And moreover, he's in all the techno-savvy projects, whatever is there, he's contributing a lot. Fortunately, he's the in charge of SSP now. Last year was only a part of the team, but today he has been elevated to the SSP. He's a front runner for that one. I'm sure that he's contributing a lot. Why I'm telling all these things is contribution. SSP is the trigger for MEF now. So now MEF is linked with SSP data. We got so much of data, real time. You want to know today at this point of time, how many members are in the institute, how many are in practice, how many ACA, FCA, etc. So on, so anything you want, you can get by the looking at the dashboard, you'll get the entire thing. That is the level of SSP today operating. Thanks to Dayanava Sharma taking that information. So now we are doing the MEF now. MEF is attached to the SSP data unless you are registered under the SSP platform. So it is not possible for you to upload the MEF. So MEF got delayed by more than a month for the simple reason that we are trying to simplify the entire format. We are simplifying the format now, and then we are unnecessary fields have been removed. Necessary fields only have been kept, and there are certain revision to be done based on the code of ethics. Recent code of ethics also with the effect from 1720. Those things have been made in line with the MEF, and then. The best part of is all of you are aware. If you have sent a declaration that need to be physically take a printout for declaration by MEF and signed by all the partners, the proprietor or the individual, as the case may be, send it by post. And the other one was digital signature. You send a digital signature, does not capture the institute. You send a physical form, does not reach it there. Somewhere it misplaces. A lot of anxious moments. Again, the MEF, they are put away on a platform stating that the documents not received. 1, 2, 3, 4. Your name appears there, and again anxious moment. All those things yesterday's theory. Now, thanks to the technology-driven situation, so where I already told Dayanava Sharma, the team, all of them help us little here and there. Now it is OTP-based. So now the declaration need not be signed at all. The moment you upload the MEF, the automatic OTP will be generated to individual as well as the partners. You validate the OTP, the declaration is done. It's as simple as that. Number two, if you are becoming ineligible, that's it. Previously used to tell I'm ineligible. I do not know what happened to me. Why am I ineligible? I have been doing the audit all these years. You will not know. Then you have to contact Dayanava Sharma or Prasanna Kumar, XYZ, and call them. Sir, this is a big thing. You please find out. We find out, no, this is a mistake. There's a mistake. You need to have 2 employees, but you've got 0 employees. Whereas that gentleman has got more than 20, 30 employees. By mistake, they put 0. But he will not know that. You have to go through some channel, or like that was it. Today is not there. If you're ineligible, you'll get a communicate. You are ineligible on these counts 1, 2, 3, 4. If you want, we will give an open window also to rectify that also. These are things, developments has taken place. So, and additional information we're taking. It's not only bank audit, many other audits also, that, many regulators are asking for a panel. We're empaneling everyone for, GST, India, so on and so forth. Around 13 columns we have. Whoever is interested there, you can also government audits, bank audits, so many things are there. Very simplified form is there. You can get benefit out of that one. This is one thing I want to tell you. And then there are the direct tax audit. Because we're talking about tax audit, the tax audit now we are the TQRB and DTC, the tax audit quality review board and direct tax committee. So we're working out. I'm also part of the team. So we're working out a checklist for the tax audit. So all the classes have been taken, given to various study groups. In fact, we had one study group in Visakhapatnam also. We have contributed for that particular checklist. The checklist will be released maximum in a week or 2. Once that comes, that is going to the checklist. If every item that is specified there against each, Form 3CD item, so the clause. So then, if everything is checked, that means that goes to indicate 95% is audit done. That is the way it is coming. It will be very handy. Training our employees or training our article plus will be very easy. That is the way it is coming. Guidance note, it's a very old guidance note. Now it's under revision. Maybe another 15 days to go. So, but for the pandemic, it should have been released in the month of May itself. That is how it was planned. Because of this, we could not update that one. Now it is going to come in another 15, 20 days to come. That will be released. It's going to be very handy now. Friend, before I close, career counseling, because the Dayanava Sharma, you were telling me career counseling. There's a directorate now. I'm convener for that one. And we have done a great job here. We have empowered many career counselors, but because of the pandemic, we are not able to have the physical, career counsel sessions are not happening. But virtually it is happening. Now that the schools and colleges are getting open down the line, I am sure. So the Hyderabad branch is a front runner for everything. Here also they'll be front runner. I see that we need to reach maximum number of students to tell them about the chartered accountancy course. And there are a number of counselors. Hyderabad has contributed this time. I'm telling you, be it the career counseling or be the examination also, valuation. Number of applications come from Hyderabad. Many youngsters are empaneled. And almost everyone who appeared for examination to be examiner, maximum passport in Hyderabad. I know some senior members also. The very first attempt they passed. To be in there for examiners, for a student to pass, 50% marks. To be examiner, they need to score 72%. 18 out of 25 they should get. They contributed a lot. I think some work was done by the branch. They encourage many people to come as examiner. That is the end result. Now we have got a very good number there. Thanks to Hyderabad branch for that one. Career counseling was taken a very big way. So, social media also used. There are very much concern about the foundation enrollment. In the month of April, May, June, the pandemic lockdown situation, that time only a few hundreds were registering that one. There was a downward trend. We're all worried how to go about. Then we took up one new initiative, ICA Commerce Wizard, 22 Commerce Quiz 2020, where 55,000, more than 50,000 students appeared. That was one big campaign we had. And in a newspaper advertisement, social media, we came left, right, center using social media. There also, Diana Sharma was a part of the team, social media team. Outcome of that is, this year I'm happy to tell the foundation researchers are, as of date, if you date to date, if you come date on date, you can make a comparison more than what it was last year, in spite of this COVID-19 pandemic. This is how things are going on. So we are working very well. As I చెప్తుంటారు తెలుగు రాష్ట్రాల నుంచి ఇద్దరం చక్కగా పనిచేస్తున్నాం అక్కడ. Both of us got, everyone recognizes the contribution we're making. So we elected good members. I'm not telling myself, Diana Sharma individually. Whoever elected, we used to get good members, we contribute, and they remember. So this is a good contribution made by all of us. So thank you. I think I've taken 2-3 minutes extra. So I'll get another occasion to talk about the committee for members in practice. So we'll have one more program. I'll discuss Diana Sharma. Both of us are the members in Telangana. Because region-wise, why you're going, not to differentiate. So the question of the session will be interactive session is possible by the members only. We'll have it another occasion. Wish you all the best. Carry on the good work you're doing it. And we have to, other branches have to emulate a lot of qualities that are imbibed in Hyderabad branch. Thank you very much, Pankaj Trivedi. So thanks for inviting me. I'm really happy and delighted to speak on this occasion. After the big conference we had, there's a lot of gap in between. Because of the COVID pandemic, I got an occasion to speak. Thank you very much. Wish you all the best.
Thank you, Prasanna sir. Just I'd like to tell you that Hyderabad branch had virtually, with the support of Diana Sharma, we tied up with our state education department, and a career counseling was done where 70,000 students from all over the state, and the commissioner sat through the entire career counseling. And he was telling us that why should we not have it on a monthly basis? He wants to have all over Telangana and AP regularly, sir. I just said so. And so this is a virtual small thank you note for coming to us. Okay. So I thought once your speech is over, I'll just share it.
Great. Very nice. It's a great idea. Everything is virtual.
Everything is virtual.
Digital platform.
Yes, sir.
Great.
Yeah, thank you.
One of the days we'll surely come, Pankaj Bhai, Prasanna sir and I will come and address all the members and students of, rather we can put it both our Telugu states together and make a large event. I think that is something which we should plan.
Yeah, thank you.
Chairman sir, 1 minute. With your permission, I have a small request from Prasanna sir, as he is representing members in industry and practice. Sir, regarding COVID assistance of 1.5 lakh. To speed up the process, sir, because it's a timely help for the members who getting a problem. And second thing is regarding CABF ex gratia for a deceased members. The conditions needs to be relooked, sir, because the 15,000 rupees, which was the old one, and I may be wrong, but please this thing. And one more thing, I already requested regarding a temp policy, sir. As of now, we are having a 10 lakhs I request you to increase that to maximum extent of at least 1 crore. There is a
Yeah.
request from my branch.
Yeah, Pankaj, can I just quickly respond to this one? Quickly, 1
Yes.
minute. Okay. Yeah. So very nice point. As for CABF for the COVID assistance is concerned, so there was one officer in charge of the entire thing. All those applications have been processed on priority, on top priority. It has come to the president office. Unfortunately, that particular officer was affected with COVID positive. There's a gap. Recently, another officer has been identified as the president. Now it is going on. Now I think by now all the pending applications should have reached the accounts department. Very soon we'll get the money for that one. Number one. Number two, regarding 15,000. There's no doubt that's under revision. We need to increase the corpus. We'll come back to because but for the COVID pandemic, we should have approached all of you to increase the corpus for the CABF. So that is under revision. It is a desire of the president to see that at least we give 25,000 rupees for the families, bereaved families per month, to handhold with them till their children come up to the age, earning member. That is the idea. So the present 15,000 is under revision. Number two. Number three, regarding this, term insurance, no doubt, LIC is giving only up to 10 lakhs. LIC is not prepared to increase that one. That's a very low premium they are giving. That is a thing. But later on, like you said, we had a discussion with all the management committee members across the country regarding the CMP, Committee for Members in Practice. Today in the afternoon, 2 o'clock, we had a meeting. 12 o'clock, we had a meeting of Committee for Members in Practice. There we got approval to go with SBI Life and HDFC Life. So both the things will come. So now we are going to enter the MOU with them. The committee has given approval today only. Very good package is coming. Up to 1 crore is there. It will be announced maximum by another 1 week or two once the MOU is entered into. That's going to be. So HDFC is coming. There's a lot of things with or without medical test. With medical 9 years like that, very good combination is coming, specially designed for chartered accountants and also students. This is the one. So we have got coming many more things. We're also tying up with one vendor for the laptops. Now the COVID pandemic, remote location, all those things are there. We need to equip our students and also members also with a laptop. That's also with a very good price. We are already tied up. It is approved by the Committee for Members in Practice. I think very soon we'll come with the announcement for that one. Thank you. I think we are getting
So only one more point, Machar. We are actually making the entire CABF online. So what is happening is, otherwise a lot of things were actually going through a document process of scanning and sending and reaching in the wrong address and all. So now very soon we are going to have an online application which our members can do it, which is almost on a final stage. It's under presidential review. So once that is done, that will also be launched. So I think a lot of transparency is going to be there in that process also.
Thank you both the dynamic CPMs. Thank you, sir.
Thank you. Thank you. Deepak quickly introduce Chaitanya so that he can just start the process.
Thank you, Prasanna sir, Central Council member and Central Council member Dayaniva Sharma ji. It is my pleasure to introduce speaker of the day, the dynamic speaker CA Chaitanya. He is MCOM, FCA, DISA, as always, also completed the certificate course of ICAI on international taxation. He has recently completed his bachelor degree in law, that too in this year, 2020, very recently. With over 50 years of experience, sir has exposure in handling statutory audits, internal audits, tax audit for various corporates, including listed companies, banks, insurance companies, trust firms, and other entities. He regularly has been representing before various income tax authorities, CIT appeals, and in ITIT Hyderabad. He has written articles on direct taxation for Chartered Account Study Circle, CASC, Chennai, and International Fiscal Association, IIFA, Chennai chapter. His specialization in direct taxes and with keen interest in international taxation. For the interest of for all our attendees, I'm sure that many of us know, but I'm just informing formally that Sir C.E. Chaitanya is the son of our great leader, C.E. Falgun Kumar sir. So with this, I request C.E. Chaitanya sir to kindly, the session is all yours, sir. Kindly disseminate the knowledge for the welfare of the members. Thank you.
Thank you. Chaitanya, I'm off on video, but I'm here only. So anytime you can just tell me, just because bandwidth will be better. Okay, and I request all of you to put questions in Q&A only. And I also request you to wait till he finishes it. Okay, let him finish the topic and then you put the questions. Even if you have some questions on which he has not covered, that can be put at the end. Don't worry, even if it is an extension, we had the fortune of hearing to Prasanna sir. So we'll definitely compensate by even staying back for some time to answer all your queries. Thank you very much. Okay. Yeah, over to you, Chandra. You have to first open the PPT and then click on Sheets.
Is my screen audible? I mean, visible?
Perfect.
Respected Chairman of Hyderabad branch, Pankaj sir, senior council members, central council members, Prasanna sir and Dayani Sharma sir, other respected members of Hyderabad branch. Good evening to all of you, and thank you for inviting me. It has been my pleasure to join you all to speak on the topic that has been allotted to me. The topic for today is new I.T.R. forms for the assessment year 2021. Originally, this is a topic on which I've spoken at a couple of branches, so I was pretty sure that I'll be able to make the presentation. But looking at the energy that Prasanna sir has thrown in his inaugural address, I was a little afraid whether I would be able to speak at the speed at which he has completed his inaugural address. Be that as it may, I will try and cover as much as possible during the course of my presentation within the allotted time. In case I don't, I'll be able to take it up in the Q&A session. Having said that, if I were to speak on this topic of income tax returns, we all know what is the purpose of income tax returns. In fact, when I was speaking to Chairman sir on this topic, I was saying probably you are a little late. Then he said, no, there are a lot of people who are intending to know on the income tax returns. Why should we spend time on learning income tax returns? In fact, like Prasanna sir has said, there was a point in time when nobody organized a seminar on income tax returns. Then why should we know about income tax returns? Now everything has gone digital, not just the CA Institute, but in fact the income tax department has gone completely digital. Earlier, the return filing, the demand tracking were on the digital mode. Now even the assessments are going on the digital mode, and very soon we have the appeals going on the digital mode. So that being the case, everything is going on a digital platform. We should be doubly sure what we are filing with the income tax department. See, we all know the purpose of income tax returns is to promote voluntary tax compliances, to collect the taxes by the government, not just the taxes alone, but also to collect the data and analyze it for taking informed decisions, and also to help administrators in completing the compliance with the statute. Essentially, it is a mechanism through which the data is collected, analyzed, and also put into action through decision making. And not just that, it also promotes voluntary compliance and also helps the administrators in analyzing the data or in going through the assessment procedures. So that being the predominant purpose, the reasons that we have for organizing a seminar on filing of the I.T.Rs is that we should be able to take the best possible route while filing the I.T.Rs. What does the best possible route mean? It means that whatever is required to be disclosed in the I.T.R has to be disclosed as it is. Nothing should be missed. There should not be an improper disclosure. Improper disclosure normally leads to demands which requires rectification. It is a waste of time both for the department as well as for the authorized representative chartered accountants, because normally a client doesn't give you extra money for doing the rectification work. So it is our duty to disclose whatever has to be disclosed, and it has to be disclosed appropriately. Which there have been real life instances where due to improper disclosures, scrutinies have come up. Even that has to be rectified, as scrutiny need not come up just because there have been improper filing of I.T.Rs. Improper filing of I.T.R, the computer picked up on the basis of some criteria. Had the I.T.R been filed properly, probably it would not have come up, and those have been circumstances where we could have avoided scrutiny. And we should also exhaust all our legal remedies provided under the Income Tax Act. What does exhausting all the legal remedies provided under the Income Tax Act mean? There are various sections under the Income Tax Act where a completed assessment can always be reopened. There are possibilities where a case which has not even been picked up for scrutiny in the first instance can come up for scrutiny in a second instance under 147 route or under any other possible route. And for all those things, most of the threshold, most of the pressure is on the SSE. The onus is on the SSE to prove that he has disclosed all the information that is required to be disclosed. Several escape routes given for the SSE thrust on the idea that there should be a proper disclosure in the ITR return. Earlier, there was a paper format where SSE was given the liberty to write whatever he wants on the paper format. SSEs were writing below the computation. SSEs were attaching a separate sheet saying that these are all the things that are taken care in the ITRs. Now you have a fixed format of ITR where the department gives you an Excel utility and there are adequate private vendors who give you softwares, and there is no space for disclosure. In fact, for persons who are treated as the most the persons who are treated as the most highest category in the income tax returns, which are the tax audit cases, even for them, there is no proper place for disclosure of majority of information, which is very vital for the case of assessment, that there is no space for disclosure. That being the case, for normal assessees who are filing their ITRs in ITR 2, ITR 3, ITR 4, probably they have very little scope for disclosing certain things. There are situations where I would like to go myself and disclose a lot of facts which don't appear in an ITR form. I would personally like to tell you at this juncture that there are innumerable examples of incomes, or there are innumerable examples of receipts which do not get taxed and therefore do not require disclosure in the ITR. But that being the case, if computer was to select the ITRs on the basis of my bank credits, then probably every ITR would come up for scrutiny in one way or the other. So all that can possibly be avoided by giving an extra column or an extra space to disclose major credits appearing in a bank account, or whatever be the requirements that an assessee would like to do. That none of that has been addressed in any of the ITR that has been appearing for a very long time. That being the scenario, the possibility of disclosing is at the minimal. There is no possibility of disclosing the extra information that an assessee can have. That being the scenario, there is every possibility that department can put an assessee to trouble by telling him that I have picked up your space for scrutiny just because you have not disclosed such and such information. So there are several legal remedies under the Income Tax Act. All of them put pressure on the concept of disclosure, proper disclosure, and for all that proper disclosure to be done, it is for us to know what are the reasons for understanding, what are the reasons for proper filing of ITR, how best we can do our, how best we can put our ability to use by properly filing the ITR returns. So probably these are the reasons for which we should have enthusiasm in learning all our ITR returns. Having spent considerable time on the introduction, we'll quickly see what are all the ITR forms that are there. This is just to recap your, it is just to bring to your memory all the, this is not something that is new. These are all things that you already know. There has been no change in the number of forms that are being used and the purpose for which they are used, but still just to recap whatever you have already learned, I have put up the slide. ITR 1 is the Sahaj return. It is applicable only to resident individuals, and the conditions are that the total income should be less than 50 lakhs, and you can have income only from salaries, house property, and other sources. You cannot have capital gains income. If you are having capital gains income, then probably ITR 1 is not your not probably, in all certainty, ITR 1 is not the form that is applicable to you. You have to switch on to ITR 2, and your agricultural income should also be at a minimal amount not exceeding 5,000 rupees. If you have large agricultural incomes, probably anything more than 5,000, huge amounts, you'll have to necessarily go to ITR 2 or not ITR 1. So these are the conditions that are put for ITR 1. And the negative list includes a person who is a director of a company or who has invested in an unlisted equity shares, like the shares of a private limited company. They are barred from taking up ITR 1. So effectively, ITR 1 is a very simple return having very few pages, but it is applicable only to very select individuals. ITR 2, on the other hand, is a very detailed ITR. The only condition is that people who are having income under the head profits and gains of business or profession cannot take ITR 2, except that all other persons to whom ITR 1 is not applicable can take the benefit of ITR 2. ITR 3 needs no introduction. It includes all the assessees who have income under the head profits and gains from business or profession. So essentially, ITR 3 is for individuals and HUFs who have income under the head PGBP. Now, if you can clearly notice, ITR 1, 2, and 3 are applicable only to individuals or HUFs. ITR 1 is only to resident individuals. ITR 2 and 3 are to individuals and HUF. There is no way corporate and non-corporate assessees, not being individuals or HUFs, are being covered under the ITR 1, 2, 3. ITR 4 is a very special ITR because it is a return that captures the presumptive taxation. It is again applicable to resident individuals, HUFs, and firms. ITR 4 Sugam is an ITR which to whom it is applicable only to individuals, HUFs, and firms. And for those people who are having income taxable under the head 44, all the presumptive incomes are getting captured under ITR 4. Again, the restriction here is that a director of a company or a person who has invested in an unlisted equity share is debarred from going to ITR 4. All other situations, he can still, all other cases can still avail the benefits of ITR 4. ITR 4, your total income cannot exceed 50 lakhs and you should have income under the heads 44 AD, ADA, or AE. It is not that if you have, for example, if a director of a company has income under the presumptive taxation, it is not that ITR 4, just because ITR 4 is not applicable, doesn't mean that he cannot go back and claim that benefit of the presumptive taxation. He can still claim the benefit, but it is under a different ITR. It is not under ITR 4. So ITR 4 doesn't actually regulate the availment of the presumptive taxation. It is the other way around. It is only that ITR 4 has been put in to capture assessees who are simple cases of presumptive taxation, not complicated. So to that extent, ITR 4 can be applied. In fact, there is a very strong notion that a person who files his return in ITR 4 is normally exempted from scrutiny. I would agree to that view, but I would not say that it is applicable in all cases. There have been exceptions and exceptions to that cases also. ITR 5 is applicable to all assessees who are neither companies nor persons to whom ITR 7 is applicable, nor individuals, HUFs. So essentially your firms, AOP, BOI, local authorities, artificial judicial person, everybody comes under the head ITR 5. So if a person to whom ITR 7 is applicable, he is not allowed to file the income in ITR 5. He has to necessarily go under ITR 7. But all other cases, ITR 5 can be applied. There have been cases where local authorities would also come under ITR 5. There are institutions like urban development authorities who are not coming within the strict meaning of local authority as described under section 10 clause 20. Therefore, for them ITR 7 may not be applicable. 7 will not apply if they do not have a 12AA registration or a 1023C registration. So to that extent, even the local authorities would form part of ITR 5. So that precaution has to be taken. ITR 6, as I said, it is applicable to all companies except those who are claiming exemption under 11. So if you have a section 8 company which is claiming exemption under section 11, by virtue of a registration under section 12AA, possibly he can go under in all certainty he'll have to go under ITR 7 and not under ITR 6. ITR 6 is essentially applicable only to companies which are taxable on its income without the 12AA registration. ITR 7, I am sure everybody would know that ITR 7 is applicable to persons who have to file their return under 139(4)(a) to 139(4)(d). Essentially, it captures a gamut of all the assessees who are claiming exemption under section 10, not just limited to 1023C, but 10, 21, 24, 26, or all other sections under section 10, including 1023C, or claiming exemption under section 11 by virtue of a registration under 12AA. So all that is being covered under ITR 7. If you ask me on a very personal note, my presentation and me also believe that it is ITR 7 which is far more difficult because it comes with its own complications which are there for a charitable trust. Be that as it may, we will try and see what are all the changes that have come in the current ITR forms. It is not possible to explain each ITR form in detail, and it will be a little repetitive task because most of you are aware what an ITR form contains. We will try and see what are all the changes that have come and how relevant are those with respect to the current year. We'll now move on to the changes that have come to the ITRs. The first change that has come in ITR 1 to 4 is that if an assessee is stating that his income does not cross the maximum amount not chargeable to tax, which is 2.5 lakh for a normal assessee, if his income doesn't cross 2.5 lakh, then normally under section 139, he is not required to file his return of income. The exception comes in the 7th proviso to 139(1). It says if you have deposits in current account exceeding 1 crore, or if you have expenditure exceeding 2 lakhs for a travel to foreign country, or if you have expenditure exceeding 1 lakh on your electricity, then by virtue of the 7th proviso to 139, you will have to mandatorily file your return of income, even though your total income is below the threshold limit. So if your total income is below the threshold limit of 2.5 lakh, then you will have to still go and file your I.T.R. by virtue of the 7th proviso to 139(1). So whenever an assessee comes to you and states that his income is below the threshold limit of 2.5 lakh, you will have to take a precaution. You will have to go for an additional testing, which is whether any of the one conditions that are described among these three are satisfied or not. If any one condition is satisfied, then you'll have to necessarily go and file his I.T.R. in the respective form. This is because 139(1) 7th proviso states that. So take a case of two senior citizens, mother and father, senior citizens staying in India. They have received funds from their son who is residing in a foreign country. They have booked tickets for a foreign country in India, and then they travel to that country. They would be senior citizens. They would be enjoying the exemption of 3 lakh rupees. They would still not be taxable by virtue of whatever be the sections that are there. But still, if they have spent 2 lakh rupees on a foreign travel, then by virtue of this 7th proviso, they will have to file their return of income mandatorily. Even though they don't have income, they will have to file their return of income. Essentially, what the income tax return doesn't capture is the source for that spending. They only want the assessee to file their return of income. The source of that 2 lakhs is not being captured. It is not even being asked for. These are the conditions which are put forth on the assessee. He will have to necessarily file his return of income. What will they do with this information is a different issue, but as of now, this is the information that they are trying to capture in the I.T.R. Now, the second most important one that has come, and this particular table has come up only because of this COVID-19 pandemic. As you all know, in March, the Honorable Finance Minister came out and gave some reliefs. Among the reliefs, it said that if there is any investment which has to be made before 31st of March, the due date got extended. It got originally extended to July, then it got extended to originally it was in June, then it got extended to July, and then it got again extended till September. So what does it all state? It states that you will have to make your investment for the assessment year 2021. Normally, an investment which is eligible for a deduction under section 80, chapter 6A, is normally to be made during the previous year itself. It cannot be made in the assessment year. This is the general rule. During the previous year itself, you will have to make a investment in any of the modes that are prescribed, and then you will automatically be eligible for a deduction under chapter 6A. That being the case, there has been a leverage or a pathway that is given saying that due to COVID-19 pandemic, if you have not been able to make your investment before 31st of March, you are now allowed to invest in the modes that are prescribed, provided you make that investment before the time period, extension period that has been given to you. That being the scenario, this particular table tries to capture all those deductions which are getting claimed, not because the investment is relating to the previous year, but it is relating to a period which is in the assessment year. So to that extent, you will have to give a separate disclosure. The eligible amount that is appearing in column number 2 is this amount that is flowing from the other schedules. It is a table that is not open. These are cells which are not open for filling up. But if you can see on the right side of your screen, you have the green cells. These are the cells where you will have to fill up the additional information that has been asked for, which is investment made in relation to any of the chapter 6A deductions after the end of the previous year, but before the date that is specified therein. Therefore, to that extent, if you have made an investment, then you will have to disclose it in that table. This is not something new. It has been given as a leeway because of the COVID-19 pandemic. Now, not just the deduction under chapter 6A, but various other deductions have also been given. Among them include your investment in 54 EC bonds or 54 various deductions which have been given under the long-term capital gains head, under the capital gains head for them to get invested. These are the various dates that are given. For example, if you have put your capital gains in a capital gain savings scheme, and if you wanted to utilize it, but due to this COVID-19, if you have not been able to utilize, the time got extended. All that extension time that has to be that has been given, if you are investing within that time, you can claim exemption for the previous year, although it is not done during that year. But the reporting has to be done in the table that has been presented to you. So to this extent, please be very, very careful, especially for those who are claiming deduction in accordance with this 54 series sections. There, if you are not been able to do that particular investment, that is your last year, normally they have the condition that there should be a purchase of a house property within 2 years time, or you should construct it within the 3 years time. For all those cases, if at all you are not able to make because of this,
we lost your. Yeah. Okay. Sorry, we lost your voice. That's all. Okay.
Okay. I hope you have lost my voice at this table.
Just
I'll repeat
10 seconds back. 10 seconds back.
Yeah. So according to this table, it says that if you have not been able to make your investment in a long-term capital gain scheme, see, we have sections like 54, 54F, where we all know that the investment should be made within the end of 2 years. If it is for the sake of purchase, and if it is for construction, it has to be made within the end of 3 years. Now, if that time limit is getting lapsed during the previous year, that is previous year 1920, and we have not been able to do that due to the COVID-19 pandemic, then there is an extension period that is given, which is not within the previous year, but outside the previous year. And for that, the reporting has to be done in the green fields that have been highlighted on the right side of your screen. So to that extent, you'll have to be very, very careful while claiming a deduction under 54 series. Wherever you are claiming a deduction, if at all you have not been able to make due to this COVID-19 pandemic, you will have to make an appropriate disclosure here. This appropriate disclosure will help in subsequently, if you don't fill this up properly, there is every possibility that your capital gain can get converted into a deemed capital gain. So to prevent all that, you will have to make an appropriate disclosure in the column that is appearing here. To this extent, I hope I have made myself clear. I'll move on to the next schedule that has been given. This is Schedule DI. It is applicable only to I.T.R. 5 and 6. Normally, you have 80 series sections, 80C, 80CC, ACCCD. All these are sections which are applicable to individuals. As far as corporates and non-corporates who are not individuals are concerned, for them, you only have very limited sections like your 80G, 80GG, and 80GGC. These are sections which are available only to non-individuals. For them, if they have made an investment beyond the previous year, but during the course of the assessment year, then for them to claim the deduction relating to the previous year, they have to make a disclosure in the green fields that are appearing here. As I said, Schedule DI, it is for an individual. Schedule DI contains section 80. It starts from 80C and ends with 80GGC. This is the Schedule DI which is applicable to individuals across all firms. But if you come to the same Schedule DI, for corporates and non-corporates who are non-individuals, for them, the form has limited disclosures because normally 80C and all are not applicable to them. Only 80G, 80GGA, and 80GGC are applicable to them. To that extent, you'll have to make the disclosure in this particular field. So I.T.R. 5 captures the Schedule DI in a different way, and I.T.R. 1 to 4 captures Schedule DI in a different way. Now, the additional features that have come up in I.T.R. 2, 3, 5, and 6 is that now a non-resident who has got no bank account in India is now given an option to give his foreign bank account for claiming the income tax refund. Normally, any non-resident, if he is operating in India, then he will have to he'll have to open a bank account in India, and for the purpose of receiving refund, if any, he will have to give that Indian bank account. Till last year, foreign bank accounts were not allowed. From this year onwards, the government has come up with a solution wherein it is allowing a foreign bank account to be quoted in the income tax return, Indian income tax return, for the receipt of refund. So please be very, very careful. This is only for the receipt of refund. The normal disclosures relating to bank accounts in India would continue to apply. So to that extent, there is no conflict. You'll have to give the list of bank accounts that a non-resident has in India. If at all he wants to take a foreign bank account for the purpose of receiving refund, this column is particularly applicable to him. We have Schedule 112A. this is a schedule that has come up in the ITR. Actually, this is not a new schedule. This was a schedule which was there in the previous ITR itself, but it was not there in the main ITR. It was there as a tool. Now, the CBDT has come up with a separate schedule itself. So you can call it a new schedule. You can call it an existing tool becoming a new schedule. But be that as it may, this is not something that is new to any of us. It was there in the earlier year also. What essentially this schedule is trying to capture is that if at all you are having capital gains and that being the shares of a company or equity oriented units or units of a business trust, and they would be taxable at a very special rate because of the section 112A, then in that scenario, that being the section applicable for long-term capital gains, so that being the scenario, you will have to enter the details in this particular schedule. This particular schedule, let me tell you that each script has to be entered separately. So if you have different contract notes, you cannot club all of them and put it in one particular column. You will have to enter them separately. Reason being that the cost and the consideration are being asked separately. So to that extent, take adequate precaution. I'm sure there could be circumstances where the clubbing could also arise. In that circumstances, there is no hard and fast rule. You can still go ahead and club, but in all probability, it is advisable to report script wise also. I mean, it is advisable to report script wise. Script wise, I don't think there is any issue, but within the script, if there are multiple contract notes, then probably you can club them and report here. Now, last year, when during the FAQs that were given, in one of the FAQ, someone, a question was raised that is quoting of ISIN code mandatory? That to that the CBDT gave a very elusive answer. It did not report during the last year's FAQ, but this year the ISIN code is mandatory in the ITR. So essentially, if at all you are reporting a capital gain, you will have to capture and put the ISIN code. ISIN stands for International Securities Identification Number. This is a code that is available either in your contract note or it is a code that is available in your any stock exchange website also. It is not a very big thing, but please be very careful. If at all, I mean, you have to necessarily put your ISIN code, and the moment you put your ISIN code, your data gets automatically checked with the information that is coming from stock exchange. Thereby, they will be able to know whether you have really disclosed the proper figures or you have evaded some figures. Because if you have not reported some of them, then there is every possibility that your case can get picked up for scrutiny. So please be very careful. Report all your cases. Do not try and escape anything. Even if there is no gain or loss, you need to require a reporting to that extent. Now, all other columns are self-explanatory. There is only one thing that I would like to explain. If a capital gain arises because, if it is a long-term capital gain arising on a sale of a scrip or equity-oriented unit, and the purchase happened before 31st of January 2018, if the purchase happened before the 31st of January 2018, then you are given an option whereby you can adopt the fair value existing as on 31st January 2018. So if you have purchased a scrip long ago, generally 112A doesn't permit indexation. So to that extent, the benefit given is the fair market value to be adopted as on 31st January 2018. So if your cost price before January 2018 was lower and the fair market value of that scrip is higher, then you can take that higher fair market value for the purpose as cost of acquisition for the purpose of offsetting against your capital gain. I mean, against your sale consideration. But in any scenario, the fair market value cannot exceed the sale consideration. So you cannot have a loss because of this fair market value, but you can always have a loss because of your cost of acquisition. For example, if your sale value is 100 and your cost is 120, then definitely you can take the 20 as a long-term capital loss. But if your sale value is 100, cost is only 20, but your fair market value is 120, then that fair market value will be restricted to the sale value only. So effectively, your net capital gain is only 0 and not minus 20. So to that extent, please be very careful. If you fill the schedule properly, I am sure the schedule itself will throw you the proper capital gain. So to that extent, please be very careful while filling up the schedule. Similar schedule is there even for 115 AD. This is a case where a non-resident can claim a benefit of a capital gains, long-term capital gains. There is nothing much in this. It is exactly identical to the schedule that we have seen in 112A. except that this is applicable only to non-residents and the old schedule is applicable to residents. To that extent, the data has to be filled in schedule 115 AD. Now, if we go to the general information, what are all the other features that are having predominantly important columns? What are all the other columns that are appearing in I.T.R. which have a very important significance, which are very significant as far as filing of information of return? If you look at this, this is a snapshot or this is a picture of your I.T.R. return in the Excel utility. I have only picked up Excel utility because I'm not sure how many of you follow which software. But be that as it may, in this Excel utility, what column do you think is of utmost importance? Which column, in your view, do you think if you don't report properly will have serious repercussions coming up? In my view, the columns which require utmost importance is your email ID and mobile number. Why? You don't fill up your name properly, it will throw you an error. It will say the name is not matching as per PAN database. You don't fill up your PAN properly, it will throw you an error. It will say the PAN is not matching with the e-filing portal database. You don't fill up your date of birth or date of incorporation properly, it will throw you an error. You don't fill up your address properly, still there is no problem. Anyway, you're not going to receive a communication at your address, except for very few circumstances. So effectively, most of the columns are ruled out. Then what is important is your email ID and your mobile number. As you all know, we are in the transition period where the department has now moved, not just the return filing and the processing and the demand tracking mechanism, but the entire department has now gone digital. The scrutiny will happen digitally. The appeals are also intending to happen over the online format. Fortunately, the Honorable ITIT comes under the Department of Law and Justice. So to that extent, even they have not gone online, but due to the COVID pandemic, they are now operating online. So in this scenario, all communication will only be through the electronic route. If you happen to give your email ID incorrectly, or if you happen to give your mobile number incorrectly, then there is every possibility that you will lose the communication that you are receiving from the income tax department. That being the scenario, it could lead to draconian results like 144 assessment, where the huge demands are raised on your, it will be extremely difficult for you to rectify those demands also. Not just rectification, if there is a huge improper demand that is raised, just because you are not able to receive the information, communication from the income tax department incorrectly, then you will end up with draconian results like 20% of the demand getting attached from a bank. And I don't need to spell out what are all the problems that you will receive. You're all very well aware. But the whole point that I wanted to drive home was that email ID and mobile number is the bridge that will act as your communication from the department. It is a bridge which joins both the SSE and the department, and which is the format through which the information flows to the SSE. You see, in the profile section, you all know this, I'm just repeating for the sake of clarity. In the profile section, if you go and see, you will have the address format. It is ideal to fill up the address format, but more importantly, in the contact details, you will have to go and fill up the email ID. At this juncture, why should you file an email ID? Why should you fill up your mobile number, and why should you fill up your email ID? You see, the manner of communication by the department is described in section 282 read with rule 127. It says, email ID available in the I.T.R. furnished by the SSE to which the communication relates to. If the communication is relating to assessment year 1920, then the email ID put up in the 1920 return will be taken, or the email ID available in the last I.T.R. will be taken. If it's a company, the email ID in the website of the MCA will be taken. Or if it is any other email ID, if it is any other SSE, then the email ID made available by the SSE to the income tax authority will be taken. There is a case where an email ID is made available by the SSE to the income tax authority. It is in your profile section. So if you properly fill your email ID in the profile section, then you will receive the communication. Why are we discussing on the email ID for such a long time? It is a very small issue, you all might be thinking. I would personally suggest that it is not a small issue. It should be taken with utmost seriousness. Why? Normally, we have a tendency that all the chartered accountants will fill up their email ID. If it crosses the threshold limit, now I am to believe that only 10 profiles can have one email ID. So if it crosses below the threshold, if it crosses beyond the 10, normally chartered accountants or the persons who are filing the income tax returns create multiple IDs and give it to their clients. I would strictly suggest that do not adopt this approach. Do not give your email ID on behalf of your client under any circumstances. There have been instances where a client had to suffer abnormally just because the auditor could not respond on time. We don't have one SSE as our client. We have number of SSEs. So by mistake, if we were to miss one SSE's communication, the SSE will suffer. And the moment he suffers, he will make you suffer also. There are various mechanisms in which an SSE can attack a CA just because he has not done a proper work. I will not go into all that. In fact, at this juncture, I would only like to tell you that the Honorable Supreme Court, with all due respect, the Honorable Supreme Court also in 418 ITR NRA iron case, NRA iron, I am sure you all would know that it is 412 ITR. No, I'm not talking about 412 ITR. I'm talking about 418 ITR, which is a very special case. In that case, the Honorable Supreme Court said that the chartered accountant of the SSE is an agent of the SSE. The Honorable Supreme Court did not make any reference to the specific power of attorney that is given by the client to the chartered accountant. The specific power of attorney limits the scope of the chartered accountant only to a specified task. The Honorable Supreme Court, without taking cognizance or probably without spelling out the considerations that it has taken in recognizing the specific power of attorney, went on to say that a chartered accountant in all circumstances is the agent of the SSE. It is very draconian. On just that point alone, we can discuss for an hour because there are innumerable sections which apply to the agent of an SSE and all that have put tremendous responsibility on the SSE. In my personal view, with due respect to Honorable Supreme Court, I don't think chartered accountant is an agent of the SSE. He only represents an SSE in a case where his case is picked up for scrutiny. Otherwise, there is no general power of attorney that is given by the client to make the chartered accountant reply to all his transactions. But be that as it may, the decision of the Supreme Court is the law of the land. That is how it is there. Probably a future decision can rectify this, but be that as it may, as of now, please be very, very careful. Do not fill up your personal ID in this column because your personal ID can lead to a lot of trouble. So the final point that I would like to drive home from this slide is that do not put up your email ID or your phone number for your client. Ask your client to put up his email ID. Even if it doesn't check, it is a different issue, but do not put up your email ID for the sake of your client. The last point that in the general information schedule that is of importance is the TDA schedule. TDA schedule is very important for the reason that it is a schedule which captures most of the information in a very short manner. For example, you could be following cash system of accounting, but the person who is giving you the income, a bank, could be following accrual system of accounting. In that scenario, he deducts TDS in 1 year and you will be claiming it in a different year. In that scenario, this TDS schedule helps you a lot. It helps you capture that information and allows you to carry forward the TDS without claiming it in the year in which it is uploaded in your 26AS. So to that extent, please be very, very careful. Your TDS schedule must be properly filled because it is that schedule which will help you understand which credit to be carried forward, which credit to be claimed. Let me remind you at this juncture that the TDS can only be claimed in the year in which the income is admitted. If the income is not admitted, then the corresponding TDS cannot be claimed in that year. So to that extent, please be very, very careful. If the TDS credit is appearing in your 26AS, and if you're not claiming that credit, then please be very careful. Put it in the TDS schedule and say that you are carrying it forward. That way, it will help you in effective carry forward of the TDS that is appearing in 26AS. So essentially, you will have to do a reconciliation wherein 26AS information is imported into your TDS schedule. To the extent you are claiming it, put it in the TDS of the current year, current financial year column, and then claim it. If you're not getting it, if you're not claiming it, then go to the last column, TDS credit being carried forward, put it in that column, and then take it as carry forward. Similarly, if you are bringing forward some TDS in the earlier years, then column 5 and 6 will be of help to you. Fill up the financial year in which it is existing, say that it is being brought forward from that financial year, thereby you will be able to claim it properly. The whole reason why TDS schedule requires your attention is that if you improperly fill your TDS schedule, the credit will be ignored, thereby resulting in a demand which will take a lot of time for rectification. Now, I would also like to tell you that there are circumstances where TDS credit will be appearing in the hands of a one person and the income is being offered in the hands of another person. For example, a partner can get a TDS credit uploaded in his name, but it will be the firm which will be admitting the income, and hence the credit will be claimed in the firm's hands. In that scenario, it is always advisable to fill your TDS schedule properly, because TDS schedule now allows you to claim the credit of a different person, provided he is not claiming it again. The TDS schedule and the income tax return prohibit claiming double TDS, I mean claiming TDS in two hands, because it has to be claimed only in one hand. But if for example, if the TDS is deducted in a wrong hand, this schedule will allow you to claim it properly by stating the PAN of the other person. Look at column number 3 that is appearing on your screen. PAN of any other person where the credit is appearing, you can quote that PAN and you can say that I am claiming the TDS. Look at column number 10. TDS claimed in the hands of other person. You can state that this is the income that is being offered, this is the TDS amount, and this is the PAN that I am saying to whom the income is being offered, and thereby you can claim the TDS. If the firm is claiming the TDS, you can quote the firm's PAN, you can state the income and the TDS, and thereby claim the TDS that is appearing in the 26 years of a different person. So essentially, TDS schedule helps you capture two things. One, if there is carry forward, brought forward of TDS, then TDS schedule is of importance. Or if the TDS is in a different hand, then it will allow you to import the TDS from the 26 years of a different person. Thereby, you can claim it in your return of income. So this is how TDS schedule has to be properly filled. Please be very, very careful while you are filling up your TDS schedule. Now, I think I finished my presentation on the general aspects that are to be taken in the ITR return. I will now move on to specific aspects that are to be taken in each ITR. ITR 2 and 3, what are all the precautions that are to be taken as far as filling up the data is concerned? ITR 2 now talks about non-resident particulars. At this juncture, I would only like you to go through the ITR 2. I hope the ITR is visible to you on your screen. If you look at the ITR, I've just taken the general utility, Excel utility. If you look at the ITR that is appearing on your screen, you can find that the residential status has to be given. Now, the residential status, if you say you are a non-resident, then it says, what is the jurisdiction of your residence? If you say you are a non-resident of India, then you will have to state you are a resident of which country. Having said that, the disclosure is not restricted just to the jurisdiction. You will also have to state the taxpayer identification number in that country. For example, if you are a resident of United States, then you will have to state your taxpayer identification number of the United States in your Indian income tax return. In case your taxpayer identification number is not available, then you will have to at least put your passport number in this column, so that instead of taxpayer identification number, you can also the ITR form also allows you to put your passport number. Thereby, if you become a non-resident, then you will have to state these disclosures to that extent. Not just this, you will also have to state your number of days of stay in India, how many days you have stayed, and how many days you have stayed in the preceding 4 years. So to that extent, the non-resident data is getting captured in the ITRs. Not just that, the salary particular.
Chaitanya, 1 second.
Yeah.
You are saying, I hope the ITR is visible in the screen. I think on the screen, we are seeing only ITR 2 and 3 important parts.
Yeah.
ITR itself, we are unable to see. I hope you are okay with that.
I am not okay with it, but I will try and share it again.
Because what happens is you'll have to do the stop screening of this screen and then open that one.
1 minute, sir. Just give me 1 minute. Probably I will share my screen in. If I don't select a file, then I think my screen will be selected.
Because you have to keep on.
Is my screen okay now? Is the
Yeah,
ITR?
I'm able to see ITR 7. It's a window.
Yeah, yeah.
30 new ITR forms AY20.
Sorry, ITR 7 is visible. Then let me go to ITR 2. Is it now
Not
visible?
visible. Yeah. Only it's the file name which is.
Sorry, then give me 1 more minute. I'll try and do it for the second time. If it is not visible, then I'll again go back to my
PPT.
ITR 2. Is it now visible, sir?
Yes,
Yeah.
it is visible.
Now, this is the place of disclosure that I was talking about, where a jurisdiction of residence and the taxpayer identification number needs to be entered. Residential status, as I said, has to also be selected. Not just that, the additional disclosures require you to state the period of stay in India also. Now, I'll again go back to my screen where I talk about the presentation. Okay. Now, the other disclosures that are to be made in ITR 2 and 3 is your salary particulars. Salary particulars, I have found out that most of the persons who are uploading the details are making considerable mistakes in issuing Form 16s. I have, at least to my knowledge, I have seen Form 16s being issued improperly, for the simple reason that for the first 9 months, if you don't deduct TDS, and in the last 3 months, if you are deducting TDS on a salary income, then you will have to upload the entire salary that is paid for the 12 months. Unfortunately, in some circumstances, I have seen cases where salary for that 3 particular months where TDS is deducted alone is uploaded. And the persons who are claiming those, who are relying on that Form 16 are filing that data alone and claiming this TDS as refund, which is a very serious issue. So ideally, you'll have to make a reconciliation between your Form 26AS, the amount that you have received in your bank account, and your Form 16, and then report the disclosure properly. If you have the ITR form now allows you to capture the salary allowance wise and not as a lump sum. So to that extent, please be very, very cautious. Disclose your salary according to the allowance that is there in your salary structure. Basic salary, HRA, CCA, all that have to be disclosed separately, and the exemption should be claimed accordingly. So to that extent, there is a change in the salary disclosure. Please be very, very cautious on that and disclose proper figure. Most importantly, there is a huge reconciliation that is going in the income tax department, wherein your Form 16, your 26As, and your bank accounts have to be reconciled properly. If you are claiming, if you are showing short salaries and if you are claiming refund of income tax, then there is every possibility that your case can get picked up for scrutiny. Not just this, in the capital gain schedule appearing in ITR 3 or ITR 2, buyer's details have to be filled up. Buyer's details have to be filled up only if the TDS under 194 IA is deducted. If the TDS under 194 IA is not deducted, buyer's details are not mandatory. So to that extent, please be cautious and take appropriate precautions. If there is deemed long-term capital gains, what is deemed long-term capital gains? As I said earlier, if you have originally said that you will make an investment in 54 under 54 or 54F in a capital asset, you said you'll construct within 2 years. I mean, you'll purchase within 2 years, or you said you'll construct within 3 years. You have put that money in a capital gain saving scheme. Subsequently, if you don't do that, then whatever is the amount that is there, it will be deemed as your long-term capital gains, depending on the section. So if it is becoming a deemed long-term capital gains, please be very, very careful. Make a disclosure to that extent. ITR form has columns to that extent. So whenever you're going through a capital gain schedule, or for that matter, any assessee, go back to the last 2 or 3 years, check whether there has been a capital gains or not. If there has been a capital gain, check whether you have claimed the deduction under 54F or 54, and then see whether it is amounting to deemed long-term capital gains or not. Normally, once we file the return of a previous year, we tend to ignore it and move ahead for the subsequent years. But there are circumstances where it could become the income of the current year. So to that extent, go back, check, and then come to the current year. Again, the long-term capital gains, if it is relating to a non-resident who intends to avail the benefit of a DT or AA, then there is a separate schedule that has been given. That schedule is appearing in ITR 2, 3, 4, 5 and all. If you want to take the benefit of a lower rate in DT AA, you need to go to that schedule and you'll have to fill up your income under that schedule. Let me tell you that there are adequate number of issues as far as claiming of foreign tax credit is concerned, or conversion of the foreign income from the foreign currency to the Indian currency is concerned. I'm not dwelling on all those issues, but let me remind you that there is a separate schedule for capturing the rates that are there in the DTAA. Please be cautious. The moment you go and see that, you will be able to understand. If at all there are any doubts on that particular issue, I'll be happy to take it in the Q&A session. The depreciation under the other sources head is again another issue. Normally, we think the depreciation under the other sources head is normally available if you offer the income under the head income from other sources. That is not the case. Depreciation can only be claimed if the particular plant and machinery is given on hire. Otherwise, it has to be normal depreciation is not allowed under the head income from other sources. Normally, we tend to calculate the depreciation as per the rates given in Appendix 1A and then claim it in income from other sources. It is a very wrong move. To that extent, please be cautious. Depreciation under income from other sources is a very restricted amount. It is applicable only if you have given the plant and machinery on hire. So to that extent, please be very, very careful. These are all the precautions that I wanted to inform to you in ITR 2 and 3. Now I'll quickly move on to the other ITR, which is, sorry, I have few more. The ITR 2 and 3 also talk about your agricultural income exceeding 5 lakhs. The moment agricultural income exceeds 5 lakhs, there are other disclosures that are to be given. Agricultural income exceeding 5 lakhs is your net income. If your net income is exceeding 5 lakhs, then you'll have to give the district along with the pin code where the agricultural land is situated, the measurement of that land, whether it is owned or leased, or is it irrigated or rain-fed. Let me again warn you at this juncture, the department is now putting the technology to the best use. If a land is not really used for agricultural purposes, and if you disclose it under this schedule, then there is every possibility that the land can be looked at through the satellite images and your authenticity of the claim can be tested. So please be very, very careful, especially if you are disclosing under the head agricultural income. If it is exceeding 5 lakhs, give a proper disclosure. Ensure that the assessee has really used that agricultural land. If he has not used and if you have mentioned it there, then your assessee is into serious trouble. Impact of ICDS, this is not restricted to ITR 2 or 3. It is there across for all ITRs. ITR 5 and 6 also come within the ambit of ICDS. ICDS read with 145. I mean, ICDS has an impact, especially in the current scenario, in the current COVID scenario. ICDS 2 read with section 145A has got a very serious impact. All your closing stock should be sold within the due date of filing of the return. If it is not sold, then there is every possibility that a certain portion of the taxes can get disallowed. I'm not going in depth into that point, but I'll be happy to take it in the Q&A session. At this juncture, I would only like to bring to your notice that if your closing stock, at least to the extent of the volume of the closing stock that is there in your P&L account as on 31st of March 2020, if it is not sold before the due date of the filing of the return, at least to the extent of that value, if there is no sale that is recorded, then I'm 100% sure that there will be some portion of your taxes which will get disallowed. So to that extent, please be very, very careful. Check whether you have complied with the ICDS 2 or not. In case there is any disallowance that is coming up, you will have to report it in the ICDS schedule. So to that extent, please be very careful. Even if you are making a disallowance on account of that ICDS 2 in your computation, it is equally important to disclose it in the ICDS schedule. So to that extent, you make a disclosure there. Secondary adjustments relating to transfer pricing, I'm not touching up here, but I'll be happy to take it in the question and answer session. The audit report has got a lot of implications. ITR 3, ITR 5, 6 have got issues with regard to audit report. What are the issues that are there as far as audit report is concerned? Let me remind you at this juncture that this is a point that has to be read in consonance with section 143(1). What does it say? Whenever there is an issue with relating to an adjustment that is being made at the intimation level, the section says, I will issue a proposal for adjustment. What are the circumstances in which a proposal for adjustment given? A proposal for adjustment can be given. One such circumstance is that if there is a difference between the audit report and your computation, then I will make an adjustment to your computation on the basis of the audit report. For example, if the auditor says that such and such item is eligible for a disallowance, if the auditor says in his audit report that 3CD, that there is a disallowance of so much relating to the assessee, then irrespective of whether the assessee has really disallowed or not, there will be a cross check by the system. And if the assessee has not made a disallowance to that extent, then the system will automatically go and make a disallowance to that extent. So in all possibility, your audit report and your ITR should be on the same length. There have been innumerable circumstances where an assessee can differ with the auditor. An auditor can say, in my view, this is a particular disallowance, but the assessee can say it is not necessary that I would agree with you. So I'm not touching on the innumerable circumstances where there can be a difference of opinion. But if your audit report is going ahead and showing a particular amount as disclosure disallowance, and if that is not getting captured in your ITR computation, then it means that under the adjustment 143.1, there could be a possibility of addition to your total income. So please be very, very careful. Ensure that your audit report and your ITR are in parity, and then go ahead and file the return of income. So at this juncture, check your audit report. If there are any extra disallowances, please be cautious, take an appropriate decision on that. Now I have completed the ITR 2 and 3. I'll go to ITR 4. ITR 4 is talking about your presumptive taxation. 44 ADA. What is the word profession? See, let me tell you at this juncture that the words business and profession should not be clubbed as far as ITR 4 is concerned. The word business has to be read separately. The word profession has to be read separately. Even within profession, 44 ADA talks about specified professions only. There are only 13 categories of professions which are classified as specified professions. Only for those 13 categories, 44 ADA is applicable. So within the professional category, you have two professions. One is the specified profession, another is the non-specified profession. A non-specified profession will not come within the ambit of 44 ADA. Therefore, a non-specified profession cannot take the benefit of ITR 4. Only specified professions, 13 categories of specified professions are given. Only for those 13 categories of specified professions, both 44 ADA and ITR 4 are applicable. Only they have to exercise the benefit of ITR 4. Now, 44 AD, having finished 44 AD, we'll move on to 44 AD. 44 AD is a very special section because it talks about a block period. What is a block period? The period in which you enter into 44 AD, the moment you start claiming 44 AD is the period where your block period will start. The moment you enter into 44 AD, your time will start ticking. That year plus 5 years. So total put together for 6 years, you should be under 44 AD only. If the moment you enter, your time period starts from the period you enter into your 44 AD. The moment you enter into 44 AD, from that period till the sixth period, till the 6th year, you should be within 44 AD only. By chance, if you are coming out of 44 AD, then you are debarred. You are not allowed to go to 44 AD again for a period of 1 plus 5. Total put together 6 years. You are not allowed to go to 44 AD. So what is called as a block period, once you enter the block, you cannot quit for 6 years in line. If you quit within that 6 years, there is no bar, you can quit. But the moment you quit, you are again debarred from entering into 44 AD for a total of 6 years. So this started from the assessment year 17-18 onwards. So there are specific columns in ITR 4 where they talk about block period. Are you within the block period? If you say yes, have you quit from the block period? You will have to necessarily say yeah, no. If you are saying yes, then it means for the current year, you cannot go within the ambit of 44 AD. So to that extent, please be very, very careful while filling up your ITR 4. I'm extremely sorry that I'm not able to show what all I'm talking in the ITR in a real format because I have some limitations with regard to time and screen sharing. So all these are columns that are available in the ITR. If at all you're having any doubt, we'll take it up in the Q&A session. I know I'm taking a lot to the Q&A session, but due to want of time, I'm not able to cover that. I am not able to show the exact field which is appearing in the ITR. And I'm sure these are all things that are easy, that the moment you go and see the ITR yourself, you will be able to understand that. 44 AE is again a different column that is appearing in ITR 4. It talks about the number of vehicles. You'll have to give the vehicle number and you'll have to say whether it is owned or not. 44 AE is applicable only if the number of columns are less, if the number of vehicles are less than 10 or 10. So to that extent, ensure that the number of vehicles are less than 10 and they go avail the benefits of 44 AE. 44 AE, we can talk on it for a lengthier period of time because the business that is described in 44 AE would come within the ambit of business and not profession. And to the extent you claim the benefit under 44 AE, it is excluded within the calculation of taxable amount under 44 AB. So to that extent, you can enjoy the benefit of 44 AE, provided you fill up your ITR properly. There are at least 8 columns which are required to be filled up in ITR 4, but out of all those 8 columns, 4 columns relating to financial particulars are mandatory. Whether you maintain your books or not, these 4 columns have to be filled mandatorily. Those 4 columns are your creditors, your debtors, your inventory, and your cash on hand. These are the 4 columns that you will have to mandatorily fill. If you are maintaining books of accounts or not maintaining books of accounts, it is always advisable to fill up these fields because they will help you in a very long way. In fact, if you have heard the seminar on presumptive taxation, I am sure you would appreciate that in spite of availing the presumptive taxation, if there is any undisclosed income, it will get taxed under it will get taxed at a higher rate of 60% plus 15%. All put together, it will go to around 78% as a taxable along with the penalty. So that is the draconian manner in which it is there. So to that extent, you will have to avoid all that by filling up this data properly. These are all the precautions that one need to take as far as ITR 4 is concerned. As far as ITR 5 is concerned, ITR 5 I would say is a mixed breed. It is neither ITR 6 nor ITR 4 for the simple reason that ITR 6 captures the Schedule 2 format or Schedule 3 format appearing in your Companies Act. That particular schedule is picked up and put up in the ITR 6. So to that extent, the format is rigid. But as far as ITR 5 is concerned, the CBDT has made adequate number of tinkering. It has altered the ITR 5 to suit its own requirements, which is not there anywhere. If I have to go and say ITR 5 talks about date of formation versus date of commencement of business. For a company, there will be 2 dates. One is your formation date and one is your date of commencement of business. For a company, everybody knows that there is a form that is required to be filed for date of commencement of business. And that form has to be filed within 30 days of commencing formation of your company. So to that extent, you know that you have a date of formation and a date of business. But for an ITR 5 guy, who is your non-corporate, non-individual assessee, how will you know date of formation? We all know the date of incorporation of that entity. It could be partnership form formation date. It could be any other date. But how will you know the date of commencement of business? This is something that has to be taken up by the assessee himself. He should disclose the date of commencement of business. Date of commencement of business has got relevance in certain fields like your 115 BAB or in your 10 AA sections. But be that as it may, date of formation and date of commencement of business have to be reported separately. Now, go to balance sheet. Balance sheet for a company is very rigid. It is just picked up from the Companies Act schedule and put up there. But as far as ITR 5 is there, they have made certain changes. What are those changes? In the loans column, loans taken column, in the loans taken column, that is your liabilities part, they are now asking what are all the loans that are taken from the related parties have to be disclosed separately. So if you have taken loans from your related parties, then to that extent, there has to be disclosure that is given separately in the liabilities column. Similarly, if you have given loans which are outside your business purpose, then that have to be reported separately. What are those loans that are taken for from related parties? How will it help? And what are the loans that are given for non-business purposes? Now, if you have taken loans from related parties, if you are giving it in that disclosure, then they will go and check what is the interest that is paid to the related parties. They will make a comparison to see whether the interest paid to the related parties, which is anyway appearing in your ITR schedule, is it in line with the arm's length price of the loans that is taken. If that is not getting matched, then there is every possibility that your ITR can be picked up for scrutiny. Or I don't know what are the CPCs contemplating beyond what I have explained to you, but be that as it may, loans taken from related parties have to be reported separately. This was not there in the ITR 6. This is not there in the ITR 6, but in the ITR 5, they have captured it separately. They are now asking for loans taken from related parties to be reported separately. Probably, in all probability, they want to check the interest paid vis-a-vis the loans taken. Now, loans given for non-business purposes. You could have a CC that you have taken. Out of those funds, you could have purchased a land which is not forming part of your capital asset or your fixed asset. Probably, if you're a real estate guy, you could have purchased a land for a partner, or you could have purchased it for any other non-business purpose. In that scenario, they want to see if you have given a loan for a non-business purpose. For example, you have a cash credit, and out of those funds, you have given a loan to a partner or to a relative of a partner, and it is not for the purpose of business. It is neither your subsidiary nor your related entity, whereby it is for the furtherance of business. Then in that scenario, loans given for non-business purposes would normally be captured in the ITR only to check whether you have made a dissolution of the interest that is being paid in your CC or in your any other format. So to that extent, there could be a inference that the interest needs to be disallowed, either it is partner's capital interest or the or CC interest. So if you are not disclosing properly the loans that are given for non-business purpose, and if it happens to come up in scrutiny, then there is every possibility that it could lead to misreporting. We have 270A where they talk about underreporting, misreporting. All these non-disclosures could be classified as misreporting also. Please be very, very careful to that extent. Proper disclosures with regard to duties and taxes have to be made in the P&L account. There have been circumstances where cases for scrutiny have been picked up because customs duty is not reported in the particular schedule of the ITR. I went on to talk to the officer stating that customs duty forms part of the cost of the item, whether it is a revenue item or a capital item. Your ICDS 2 itself says that it should form part of the cost of the item, raw material or the fixed asset. Then where is the question of showing it in separately in the duties and taxes? The officer also did not have an answer, but be that as it may, duties and taxes have to be reported separately in the schedule given in the P&L account. So, I mean, there is a separate schedule called as P&L account. In that, there is a column called as duties and taxes. In that, proper reporting has to be done. If there are bad debts written off, to the extent it exceeds 1 lakh, proper disclosure has to be given. Adequately ensure that the assessee, if it is more than 1 lakh, you have to give the name, address, and the PAN number. PAN number is not available, address has to be given. Probably department go back and check whether it is really written off as bad, or for whatever be the reason, they could start a proceeding on the other guy who has got the benefit also. So to that extent, please be very, very careful, especially if you are reporting bad debts. The GSTN wise annual value of the outward supplies has to be given. I am pretty sure it will not tally, but be that as it may, the ITR form only asks you to give the GSTN wise value of annual outward supplies. You'll have to give that. Apart from that, please be very, very careful. If you're reconciling your ITR, if you're filing your ITR, check whether there are any unreported purchases in your 2A. If at all they are really your purchases, then you need to report, because every unreported purchase will attract a tax liability of 78%, which is draconian. So to that extent, please be very careful before reporting. Lastly, if you are having specified business under 35 AD, please be aware that there is something called as alternate minimum tax. Disallowing 35 AD, if you are liable for taxation, it will be treated as your tax liability. So to that extent, please be cautious. Calculate depreciation also. To that extent, you enjoy a benefit. All this AMT reporting and specified business have to be cautiously entered in the ITR, because the moment you are not cautious, there is a possibility of it getting converted into demand. ITR 6 precautions. As you all know, there are new rates under the new sections for 115 BBA, 1 BAA, 115 BAB. You have sections for which forms also have been notified, Form 10 IC and 10 ID. All those forms have to be filed before the due date of the filing of the return. So to that extent, take adequate precaution, exercise the option in time, and file the forms also in time. There are new rates under the depreciation schedule, which is the 45% rate. Last year, all the rates were capped at 40%. Now we have a special rate, which is the 45% rate. 45% rate is applicable to motor cars purchased after 23rd August 2019, but before 31st of March 2020, and put to use within that time period. And if they are used for hired business, if you are using those cars for running them on hire, then the special rate of 45% will apply. Take benefit of that additional rate. Earlier we had 60%, 100%. Now all that has been capped at 40%. The only high rate that is available in the Income Tax Act is your 45%. Take benefit of that. Depreciation schedule needs to be filled in properly. I know that ITR Excel utility or any other software utility allows you to enter depreciation manually, but I am 100% sure that the manually entered depreciation schedule is cross-checked in the CPC using the rates. So please be very, very careful. If you are having additional amounts, fill it up in the necessary additional schedules that are given. Do not put it or club it with your normal depreciation. All I wanted to say is that normal depreciation is different from additional depreciation. Don't club additional and the normal depreciation together. Normal depreciation has to be reported in that respective schedule, and additional depreciation has to be reported separately. So to that extent, take adequate precaution. I have come across a lot of instances where normal and additional depreciation were clubbed together, and the proposal for adjustment made disallowance. So that is why I'm cautioning you on that extent. Share application money, it has become a big menace. now you have section 68 trying to capture the source of share application money. Not just that, you also have the SFT transactions where you are required to disclose. A company which is accepting share application money has to necessarily disclose that it is accepting share application money beyond the threshold limit of 10 lakhs, and it has to file a SFT report that it has accepted share application money or share capital during that year. So to that extent, data will get captured. So if you're a company which is filing your return of income, ensure that you have filed your SFT much before your ITR, informing them about the share application money. Share application money comes with its own sets of problems. The latest decision being the NRA of the Supreme Court in 416 ITR. Subsequent to the Supreme Court judgment, there have been several other judgments which have either concurred with the ITR, with the Supreme Court judgment, or have deferred, saying that they are on a different set of parameters. Be that as it may, share application money is not something that is to be taken lightly. Take adequate precaution before filing the company return. You have the 115 JB minimum alternate tax provisions. So when if you are filing the ITR of company, ensure that your liability under your 115 JB minimum alternate tax is less than your corporate liability. If it is more, then you'll have to admit the liability as per 115 JB itself. Proper disclosure under 115 JB will help you capture that adequately. I am sure that the accounting standards are different for different assessees. For companies, you have Ind AS or normal AS applicable. For non-corporate assessees, there are no accounting standards applicable, but the auditor has to exercise his own judgment before resorting to a deviation from an accounting standard. And under the income tax law, you have the ICDS applicable. Now you'll have to make a reconciliation between the normal accounting standards and the ICDS. There have been innumerable cases. Let me tell you again and again, there have been innumerable cases where there can be a difference between your ICDS and your normal accounting standard. I'm very happy to state that the Institute has come up with a guidance note on ICDS separately, and that guidance note captures all the scenarios where there can be a difference between ICDS and your accounting standard. All that has to be properly exercised before filing your ITR 6. 43B, there are some consequences arising in 43B. Now you have the GST, where you have an electronic cash ledger and electronic credit ledger. Very recently, the Supreme Court has come out with a very controversial judgment. With all due respect, the Honorable Supreme Court failed to take the cognizance of an earlier judgment of the Supreme Court itself, thereby leading to two divergent views. You have the decision of the Honorable Supreme Court in Maruti Suzuki case on 43B in 421 ITR, where it said that the electronic credit ledger balance cannot be used for the purpose of set-off of 43B to the extent it has not been utilized. To the extent the balance is lying in electronic credit ledger, it is not utilized for the purpose of set-off. That cannot be used for the purpose of set-off under 43B. Whereas it says if there is a balance lying in electronic cash ledger, and if it is not set off, even then it can be used for the purpose of set off under 43B. The electronic cash ledger issue was dealt with in Modipon's case of the Supreme Court in 400 ITR, but the electronic credit ledger case has been dealt with by the Supreme Court in Maruti Suzuki case 421 ITR. Both the judgments have been given in the earlier scenario of PLA account and the Modvat credit, but they are equally applicable in the present scenario, where instead of PLA it is replaced by electronic cash ledger, and instead of Modvat credit it is replaced by your electronic credit ledger under the GST regime. So these two divergent views of the Supreme Court in two different assessees can have a draconian effect on your 43B disallowances. Take adequate precaution on that extent and exercise the judgment to that extent. ITR 7, I'm coming to the fag end of my session. I have another 10 to 15 minutes left to complete this session. ITR 7, as I said earlier, is the most difficult ITR to fill up. In priority, I would give most importance to ITR 7. Normally, people will think that my father has spoken mostly on ITR 7, so I have undue importance or undue favor in favor of, I'm giving undue importance to ITR 7. The answer is absolutely no, because ITR 7 is the only ITR that has to be filed, that has got consequences if not filed before the due date of the return. Simply being that if you don't file your ITR 7 before the due date, then the assessee will lose the exemption under 12AA. If you don't file the ITR 1 to 6 before the due date, there are consequences, but there are escape routes also given under the Income Tax Act. But as far as ITR 7 is concerned, if you don't file your ITR before the due date of the filing of the return, I will tell you there are draconian complications arising to the assessee. His 12A can be challenged, his 12A can be removed, 12AA registration can be removed. He will be put to undue hardship. Probably 115 TD section, which talks about taxing the assessee who has lost exemption under section 11 can also arise. So to that extent, please be very, very careful. Fill up your ITR 7. And I also observed that most of the proposals for adjustment have come up in ITR 7s due to not filing the ITR 7 properly. So I would like to list out the precautions that one should take while filing ITR 7. ITR 7, as you all know, is divided into two parts. One is part A, talks about the general information and the list of schedules that are there. And part B talks about your statement of income, calculation of tax liability, tax payments like TDS, TCS, and the verification part. Schedules are numbered in a very peculiar format. You don't have a serial number for these schedules. You have each schedule like I, J, K, and all. Each schedule is applicable to a very particular set of people. So you should know which schedule is applicable to you, which schedule is not applicable to you. You will have to fill up the data only in that schedule. Just because for a charitable association, you prepare an income and expenditure statement, you prepare a balance sheet, doesn't mean that you will have to fill those details compulsorily in ITR 7. I'm repeating again, just because your charitable association has an income and expenditure account, has a balance sheet, doesn't mean that all the details will be filled up in the ITR 7. Only if you are claiming exemption under 1023C 4, 5, or 6, or if you are claiming exemption under section 11, only in those cases you will have to fill the data relating to your income and expenditure and your balance sheet in the ITR 7. But if you are claiming exemption under 1023C, 3AC, 3AD, 3AE, then you need not fill the details under ITR 7 relating to your income and expenditure and the balance sheet. I'm repeating, there are lots of columns where your income and expenditure and balance sheet are asked. A person should know which when those details have to be filled up. If you are falling within the ambit of 1023C, 3AC, 3AD, 3AE, then you need not fill up the details relating to your income and expenditure and the balance sheet in the ITR 7. So effectively, you must know which schedule is applicable to which assessee. If you are not doing that, then you are under serious trouble. I'll take you through all the important parts of an ITR 7. The first one talks about registration, the section under which you are registered. You are registered under 1023C or you are registered under section 11, read with 12AA, has to be, it talks about registration and approval. There are two different words, but essentially they are applicable to two different sections. So if you are registered under 12AA, then you will have to report there. Approval will be under the 1023C route. So to that extent, you will have to fill your, the distinction is not very vital, but it definitely there is a distinction between registration and approval. You will have to give up the respective columns necessary. You will have to fill up the fields necessary. If you look at the fields that are appearing in the right side of your screen, whether application for registration is made as per the new provisions, this column till the end, it is talking about the new provisions, that is section 12AB, which is not applicable to the present year. Since 12AB provisions are yet to come into force, only column 1, 2, 3, 4, and 5 are relevant for the present assessment year. Columns starting from the new provisions till the end are not applicable to the current period. So you need not report columns 6, 7, 8, and 9 in the new ITR 7. Then you will also have to report the registration under any other law other than the Income Tax Act. Normally, the registration talked about is the law which is governing the format of the institution. For example, you are registered under the Societies Registration Act, you will have to give the Society Registration Approval Number. You are registered under the Companies Act, Section 8 company, you will have to give the Companies Act Approval Number. Like that, the format in which you are registered, your entity should be given under this column. Apart from that, if you have taken a registration under the state laws. For example, a hospital has to take a registration under the state laws from the medical council. All those approvals are to be given. If you're running a school, then to that extent, if there is a registration that is taken, that registration number also has to be given here. Essentially, the registrations which have a bearing on the objects of the trust have to be given in this particular schedule. You also have to give, if you have accumulated amounts in the earlier years relating to section 11.2, then to that extent you will have to fill up the schedule. This is only applicable if you have accumulated amounts under 11.2 in the previous years. If you have not accumulated the amounts under 11.2, then you need not report anything in this particular schedule. It is applicable, 11.2 is applicable for the past 5 years. So check past 5 years. If at all you have accumulated any amounts, then to that extent reporting under this schedule would be necessary. You will have to state the amount that is accumulated, how much of what purpose you have accumulated, how much you have already spent, how much you are spending during the current previous year, and what is the balance amount that you are intending to carry forward. All these things have to be captured in I.T.R. 7. Now, which schedule, which person is applicable? Schedule J. Schedule J essentially talks about the number registration, I mean the details relating to corpus funds, how much is received. It also talks about the investments that are being made. Schedule J is a very particular schedule. At this juncture, I would like to stop my screen here, and I would only like to share the I.T.R. 7 that is there. I will take you to I.T.R. 7. I'm sure it will be visible on your screen. Thank you.
Yes, increase the size.
Size, okay. Hope it is visible now.
This is good.
Now, I.T.R. Schedule J now talks about the investments that you want to put. What is the amount of corpus that you have got? What is the non-corpus that is there? In what format have you kept it? Have you kept it under 11.5 format or not? All these things are being talked about here. If you have 13.3, these are all the details that are being asked in Schedule J. The only point that I would like to mention here is that this Schedule J is applicable for entities claiming exemption under 1023C 4, 5, and 6, or a claiming exemption because of the approval under 12AA. It is not, I mean, the details need not be furnished if the entity is claiming exemption under 1023C 3AD 3AE. So essentially, if you are an entity which is substantially funded by government, or if you are an entity whose gross receipts is less than the threshold limit prescribed, which is 1 crore, you need not fill up Schedule J. So to that extent, do not go and unnecessarily fill up Schedule J. Similarly, you have Schedule K, which is talking about, it is a schedule that has to be filled up mandatorily by all the entities. There is no exception. Schedule LA talks about the political parties. Schedule ET talks about the electoral trust. Schedule VC is applicable to all the SSEs, not just to 1023C 4, 5, and 6. It is applicable to all SSEs across those who are filing the I.T.R. 7. For all of those SSEs, Schedule VC is mandatorily. If you have the figures, you have to enter. Otherwise, you can just enter 0. Schedule AI is applicable to entities who are claiming exemption under 11 or 1023C 4, 5, and 6. So for entities claiming exemption under 1023C 3AD 3AE, this Schedule A is not applicable. Do not fill up this Schedule A, unnecessarily leads to complications. Schedule ER talks about expenditure revenue, and Schedule EC talks about expenditure capital. Schedule ER and EC should be filled where you are claiming a particular amount as application of income. That has to be filled in here. The last point is more important. It says how much of this is out of income of the current year, and how much of this accumulation is out of the income of the earlier years accumulated. That has to be reported here. More importance needs to be given to this particular fields, because this is the way in which you categorize the income, expenditure, accumulation. So to that extent, please be very, very careful. The source of the expenditure has to be explained in this particular column. Similarly, you have Schedule EC talking about expenditure capital. Here also, the source through which you have met this capital expenditure has to be disclosed. For filing of this I.T.R. properly, there is no need to say that you need to have a strong foundation of the knowledge of the Income Tax Act. I.T.R. Schedule EI1, EI2 are self-explanatory. I'm not going there. Schedule EI3 is only to be filled by persons who are claiming exemption under 1023C 3AB or 3AC. 1023C 3AB and 3AC talk about institutions which are wholly or substantially funded by government. receipts being more than 50%. In that scenario, you need to fill up only schedule EI3. You need not fill up all the other schedules like AI, ER, EC. You need not fill up that. You can straight away go to EI3 and then fill it up and close the issue. Similarly, if the gross receipts of a hospital or a school did not exceed 1 crore, you can only fill ITR schedule EI4 and then keep quiet. You need not fill up schedule AI. You need not fill up schedule ER and EC. You can simply fill up EI4 schedule for entities claiming exemption under 1023C, 3A-D or 3A-C and finish the ITR. So to that extent, please be very, very careful where you are filling up the ITR. Now I'll go back to my presentation again. I think we have discussed about all the schedules. We'll quickly move on to the next part. EI3 I have explained, it is applicable only to those claiming exemption under 1023C, 3AB or 3AD. Similarly, EI4 is applicable to entities claiming exemption under 3AD and 3AE. Now, what is more important is part B, where your total income is calculated and the tax thereon is computed. Just check whether it has been properly done or not by going to part B and saying compute tax automatically. What are the common problems that come up with ITR 7? The most important thing is that ITR 7 along with the audit report has to be filed before the due date of the filing of the return. If for any tax audit assessee, if I'm not able to file the ITR before the due date of the filing of the return, the maximum penalty that can be levied is 0.5% of turnover or 1,50,000 rupees, whichever is lower. Now, that being the scenario, the maximum amount that I can be exposed to is only 1,50,000 rupees. If I'm able to show a reasonable cost, even that 1,50,000 is also not liable to be paid. But in the case of ITR 7, in the case of charitable trust, even if I have a reasonable cost, if I don't file my ITR 7 and my audit report before the due date of the filing of the return, then I will lose my exemption under section 11 for that year. It is a very, very draconian section. There are way outs, but the way out is not as simple as it is for other assessees. So if you are filing your ITR 7, please be very, very careful. Ignore all other assessees first. Complete the charitable trust. File all of them before the due date of the return. Take it as a priority for ITR 7s and then go in the secondary priority basis to the other assessees. If there is a delay in filing of audit report, then now earlier the power was with the ITO for the purpose of condoning the delay. Now the power has been transferred to the commissioner. So any delay in filing the audit report, then the power to condone is given to the commissioner exemptions. Thereby, condonation petition under 119(2)B has to be filed with the commissioner. Similarly, accumulation for 1 year has to be mandatorily reported in Form 9A. Accumulation under 11(2) for 5 years has to be reported in Form 10. Both 9A and Form 10 has to be filed before the due date of the filing of the return mandatorily. In case you forget to file 9A or 10 within the due date, then again you will lose the benefit of accumulation, and the amount accumulated is taxed at MMR. Therefore, Form 9A and Form 10 filed belatedly will again have to go to the commissioner for condonation. In this regard, all the circulars that are issued are mentioned in you and appearing on your screen. The last circular says that any condonation delay, either for Form 9A or for Form 10, cannot be filed beyond the 365 days period. So if there is a delay beyond a 365-day period, for example, your due date of filing is 31st October. If you are filing it beyond 31st of October by 365 days, then even commissioner may not have the condonation of delay power. So to that extent, please be very, very careful. Form 9A, Form 10, if at all it is applicable, it has to be filed before the due date of filing of the return. If it is not filed by any chance, by mistake you have missed, then within 365 days, go to the commissioner, seek a condonation under 119(2)B, get it rectified. Disallowances, all TDS provisions are now applicable to trusts also. In case there is a disallowance, then make a proper, remove it as an application of income and then only claim the balance amount. If at all there is any amount that is remaining unapplied, go for accumulation under 9A or Form 10. So please pay more attention to the TDS items also as far as trusts are concerned. Similarly, if a trust is not registered, it is claiming exemption under 1023C, 3AD or 3AE. The threshold limit is less than 1 crore. In the current year, it has not got itself registered under 12AA, and The moment it has not got registered under 12AA, the threshold of 1 crore process, it will neither be eligible to claim exemption under 1023C 3AD, nor be eligible to claim exemption under 11. In that scenario, what is to be done? ITR 7 is not applicable to those cases. You will have to mandatorily go under ITR 5. So please pay more precaution to that. 13.1C and 13.1D violations, I need not say anything on this. The moment this violation comes into picture, the trust will lose exemption under section 11. It will be taxable at MMR, and there is every possibility that the officer can invoke 115 TD section for the taxability of the entire trust as a whole. So please be very, very careful. If the return of income is not filed on time, as I told you, there is a way out, which is condemnation petition, but it is not an easy way out. It is a very long drawn process, causing frustration to the assessee due to the demands that are raised. These are all the common problems that I wanted to talk about. Hope I have concluded my session within time. I'll be here to answer all your queries, whatever time it takes. With this, I come to the fag end of my session. These are the final words, which is nothing but that I've already described, so there is no need to go into this. The only word that I wanted to talk about is that before, if you're using softwares of private vendors, try and import the software. I mean, try and convert your I.T.R. entered in the software into a paper format. Check the paper format. That will be more helpful to understand whether you have filled the data in that software properly or not. If your paper format is all right, then your normal the data filled in the software is all right. That is one precaution that you need to exercise. Also, don't forget to attach the notes on accounts, because notes on accounts, whether asked or not, whether applicable to tax audit assessees or not, it is mandatory for all business cases. So please be very careful to that extent. These are the final words that I wanted to talk about on the I.T.R. forms. I thank you all for a very patient hearing. I'll be here to answer all your queries. Thank you, Hyderabad branch, for giving me this opportunity. Over to you, Chairman, sir.
The pleasure is all ours, Chaitanya. You did an excellent job keeping a beautiful tempo from beginning to end. And definitely, I see a very interesting speaker for members down the line. I'm very happy to have invited you. Thank you very much. It was excellent.
Thank you, sir.
And Chaitanya will start taking the questions.
Yes, sir. I will start answering the query, sir.
Yeah.
The first query is that
I can read it for the benefit of members quickly.
Yes, sir.
So that you can also open Q&A and see.
Yeah, I've already opened, sir. I'll start. I'll read the question and the answer, sir. In case I miss out, I request you to guide me.
Okay.
The first one is, what is the I.T.R. form to be used in the case of trust not registered under 12AA, although registered under the Telangana Trust Act? Sir, I.T.R. 7 is applicable only to entities who are claiming exemption under section 11 or under 1023C. So if you are claiming, if your trust is not falling within that ambit, if you're, as you said, your trust is not registered under 12AA, if you are claiming exemption under 1023C 3AD or 3AE, then also you can file I.T.R. form. If your trust is neither claiming exemption under 1023C 3AD or 3AE, nor claiming exemption under section 11, then you will have to necessarily go and use I.T.R. 5. I.T.R. 7 would not be applicable to you. This is the answer to the first question, sir. The second question, for the assessment year 1898, I.T.R. 7 was filed by a trust, although not registered under 12AA. Notice said that income is charged under maximum marginal rate. Reply given requested to condone and allow to file I.T.R. 5, but officer was AO has passed. Grievance cell was again requested. However, they said unless AO is issued, further course of action cannot be done. CPC finally transferred to the jurisdictional AO, but he said he cannot have the rights to condone and allow I.T.R. 5. Since COVID happened, thereafter status quo maintained. However, for assessment year 1920, I.T.R. 5 was filed and was processed, AO issued. What are the options available in that scenario? Sir, right from the beginning, the power to condone a delayed I.T.R. form is not there with the ITO. ITO or the AO, for that matter, had only the power to condone an audit report. Even that is now removed. All the powers to condone a delayed I.T.R. or the audit report or your accumulation forms 9A or 10 are only with the commissioner. Exemptions, not the commissioner appeals, the commissioner exemptions who sits in Hyderabad. So you can make a condemnation petition to him, and under 119(2)B, there is no fixed format. You can make a normal white paper representation and then get it done by him. Commissioner exemptions has got the power to condone. You can get it condoned by him, file the respective ITR. In fact, you yourself can go and say that the ITR is defective because I filed using a wrong ITR. You yourself can say that ITR should not be acted upon because it is defective. You file a fresh ITR, ask for a condonation delay, and then get the things rectified. I think that is the only way out for your problem. The next question, whether exceeding 1 crore deposit is applicable for savings bank account or fixed deposit accounts. No, it is applicable only for current accounts, sir. The 7th proviso to 139 says that it is applicable only to current accounts. But if there is a deposit exceeding 1 crore in savings account, automatically your case will get picked up for scrutiny due to the SFT implications that come out of that. So you will have taxability there arising out of that. Is there any disclosure in ITR for utilizing capital gains within the time allowed without capital gain deposit? Sir, if you have utilized the capital gain within the previous year itself, then there is no need of investing in a capital gains deposit account, and therefore disclosure is not required. You can simply claim the exemption straight away. But if you have deposited into capital gain account, then utilization out of that has to be reported. There is a separate table for reporting that in the capital gain schedule. I request you to see that. In case you are not able to get through, we'll have this conversation offline and I will be able to guide you through on that. The next question, I had to shift the shares held from one broker to another as the former was debarred by the SEBI due to fraudulent activities. Both the demat accounts are in my name only. The earlier broker shows this as sale and shows gain or loss accordingly. Whereas I feel that this should not be treated as sale, I continue to hold the shares in the same name and PAN. Sir, if there is a transfer from one broker to the another, and if that transfer is strictly happening from the demat account number, from one demat account number to another demat account number, in my personal view, there is no transfer, and absolutely you are correct in saying that there is no sale. But if this demat broker is selling it and you are purchasing it in another demat broker's name, then there is a sale happening. But if it is strictly a transfer from one demat account to another demat account, you are absolutely correct in saying that there is no sale and it is only a normal transfer, not liable for capital gains. So to that extent, I think you are correct in saying that. I have income under the head 44 ADA and also capital gains. Which is the correct form, ITR 3 or ITR 4? Ideally, ITR 3 is the right form, sir. But you can still claim exemption under 44 ADA. ITR 3 does not bar you from claiming exemption under 44 ADA. You'll have to tick the necessary fields. But in my personal view, ITR 3 is applicable to you. We do not find auto download in respect of profile details under 26 AS while filing ITR. Any way out? The only way out is to use a private software. There are softwares which are allowing you to do that. Your ITR Excel utility does not allow you to do that. They have promised that from this year onwards, there will be an auto download in ITR Excel utility. I don't know how or what extent they'll be allowed to do. This is first year for every one of us. But normally, all the private softwares allow you to do. If you want to have a recourse to that, you can use a private software. Otherwise, Excel utility as of now does not allow you to do that.
Chaitanya, the next three questions almost, A.V. Sharma, Samamurthy, and one below Ashok, all three are almost same questions. We can just combine and.
Sure, sir. Samamurthy sir's question also, I would like to read it out. First, for Sharma sir's question, for my current year income, March month billing client paid in April after deducting tax and TDS credit is shown in the next year's 26 AS. Income declaring on 1 year and TDS credit in 26 AS in next year. How do we show? Sir, this is actually a very right question because the income, normally the TDS deduction precedes the income admission. But in your case, very peculiar case, income is being admitted in the earlier year and TDS is being claimed in the credit in the subsequent year. It is actually a very difficult case to resolve. Normally, income and the TDS claim should be in the same year. The best way, the best alternative is to ask the assessee to revise his TDS returns and show the TDS in the original year itself. There is a very difficult chance that you will be showing income in the earlier year and the TDS happens in the subsequent year. But be that as it may, it is advisable to ask your assessee to shift the TDS in the preceding year itself. that is the best recourse. Otherwise, you can claim it in the subsequent year. But if your case gets selected for scrutiny and if the officer asks you to show whether the income is admitted in that year, then you will be put to a problem in the subsequent year. Income declared in the earlier year on accrual basis, whether TDS uploaded in the next year. I have already answered this question, Samamurthy sir. Probably the same answer is applicable to you. If assessee being a US citizen declares only non-resident, what are the implications? Assessee being US citizen declares non-resident, simply he will have to show what is his tax identification number there. There are no major implications arising in the Indian income, but there are huge lot of implications arising to him in the foreign country, because he will have to show the Indian income also there in the foreign country, and he will have to pay the tax there. So to that extent, there are complications arising there. If he has got Indian assets, then he will have to show those Indian assets also in his foreign income. As far as Indian chartered accountants are concerned, our implications are very minimal, except that you will have to check whether filing of return is actually mandatory or not. There are circumstances where filing of return is not mandatory under 115A. Please check that. Possibly your assessee may not even require filing of the return. So to that extent, you can escape filing of the return. TDS uploaded in the earlier years on accrual basis after the due date for a belated return. However, TDS is claimed in the year of receipt. TDS carry forward not shown because it is not appearing in 26AS. What to do? Sir, these are all practical problems uploaded in the earlier years, but even after filing the belated return, if it is appearing in 26AS, then probably in spite of not showing in the carry forward, you can still claim it as a brought forward and then do it. As long as it appears in 26AS, your TDS schedule is sufficient enough to capture it, and CPC will also allow it as a credit. But if it is not appearing in 26AS itself in any of the previous years, then you are having a serious trouble, sir. CPC will simply disallow that. Probably you will have to go and get it credited in a manual format, or you can ask the assessee to refund it since he has not given you the credit. That is the possible scenarios. Any possible examples under H of ITR 2 and 3? Please discuss. What is under H? I am not able to follow, sir. Are you asking it from my slide or are you asking it from some other scenario? I'll just go to my slide.
Sir, you can just put it in chat.
My slide doesn't talk about H. Okay, ITR H, I got your point, sir. You are asking about the differences between the audit report and the ITR. I can tell you a number of examples, sir. For example, the ITR asks you to say whether there is a disallowance on account of delayed payment of employees' contribution to PF ESI. Sir, let me tell you at this point, under 143(1) intimation, what can be added is the disallowances reported in audit report, not captured in your computation. Disallowances reported in your audit report, not captured in your computation. So if the auditor reports that there is a disallowance, then if it is not captured in your computation, there is a possibility of addition. What is the auditor giving in his audit report as far as 43B is concerned? He is only saying that these are all the payments that are made, and these are all the due dates, and these are all the actual payments date. Is he saying that there is a disallowance as far as employee concerned? In my personal view, he is not saying that there is a disallowance as far as delayed payment of employees is concerned. Why? There are court judgments on both sides of the coin. The auditor also, in agreement with the assessee, would like to say that there is no delayed payment. Even though there is a delayed payment, there is no disallowance because the issue has not yet reached finality. It is still in the fighting stage. But just because the auditor reports the dates, the data, due date of payment and the actual date of payment, the ITR itself automatically says that the auditor is reporting it as a disallowance. It is a very wrong notion, but be that as it may, if you report the data relating to delayed payments, then that data is treated as a disallowance and it is getting captured in your ITR. That is just one example. There are hundreds of examples. I will not take your time, but just to throw the point to you, I have mentioned that example. If the turnover crossed the threshold limits under audit, threshold limits, then audit under section is not mentioned, is mandatory. If the turnover is within the threshold limit in the subsequent year, what is the position of block period? Sir, if the turnover has not crossed 2 crores, then you are within the block period. But if you have crossed 2 crores, then you are no longer in the block period because of the turnover crossing limit. So to that extent, even though you are not complied with 44 AD, you will still be able to claim 44 AD in the subsequent year. I don't know whether I've answered the question to your satisfaction. I'll repeat the question. Sir's question is that I was originally in the block period. In one particular year, my turnover exceeded 2 crores. Because it exceeded 2 crores, 44 AD itself is not applicable. In that scenario, if I again go back to 44 AD, if my turnover is less than 2 crores in the subsequent year, then will I be still able to claim 44 AD even though I'm opted out? In the second year, where the turnover was exceeding 2 crores, you have not opted out. 44 AD itself was not applicable to you. So the moment your turnover is again less than 2 crores, you will still continue to avail benefit of 44 AD. It does not mean that you have opted out of block period. You will still be able to enjoy the benefit of 44 AD. That is the answer to your query, sir. If you have not answered it satisfactorily, probably you can get back to me offline and I'll be able to answer. In case of individuals, ITR 3 and 4, balance sheet if business related items only, or it should include personal acquisitions of movable and immovable properties.
The next question.
Yeah. ITR 3 and 4. Yeah, it is the next question, sir. ITR 3 and 4 normally talk about, ITR 4 doesn't talk about balance sheet. Basically, ITR 3 says that you will have to report your balance sheet. Normally, ITR 3, if it is an audited balance sheet, you will have to report the business balance sheet, not just the business balance sheet. In my personal view, you will have to report the personal balance sheet also. Generally, the ITR forms compulsorily require you to give your asset details if your total income crosses 50 lakhs. Total income crosses 50 lakhs. But in my personal view, in ITR 3, it is not advisable just to give your business balance sheet. It is also equally safe to give your personal balance sheet also, so that tomorrow there is no, I think the distinction between business balance sheet and personal balance sheet is removed. Look at Form 3CD. They ask you to report on incomes appearing under 56.2.9, 56.2.10, 56.2.7A, 2.7B. Those are all items which appear within the scope of your personal balance sheet, but still they are asking you to report. So I think with the advent of points appearing in 3CD relating to 56.2.10, I think the distinction between personal balance sheet and business balance sheet is removed. You will have to report both the assets appearing in your personal and business balance sheet in your ITR 3. Will the tax authorities insist on submission of personal balance sheet also? That I think I've answered, sir. In my personal view, personal balance sheet should be reported. They cannot insist, but if at all your case comes up for scrutiny, possibly they can insist. Whether block period of 6 years rule is applicable to 44 ADA presumptive taxation. The block period is not applicable to 44 ADA cases, sir. It is applicable only to 44 AD. 44 ADA, you can opt in 1 year, come out in the second year, you can again opt in the third year. Block period rule is not applicable to 44 ADA cases, sir. My personal mobile number and email ID, sir, I have already shared with Pankaj, sir. I will again share it with you.
I will share it. We can just put it in chat also afterwards. Sure. Take the next question.
Yes. Suppose a client does not have income during the previous year and not crossing the basic limit, and also taking into the 3 scenarios whether compulsorily ITR is to be filed. Yes, sir. If he is falling within one of the 3 scenarios, even though he does not have income, he has to mandatorily file his ITR. If he is falling within the 3 scenarios, if he is not falling within those 3 scenarios, he need not file his return of income. There is no compulsion. He need not file his return of income. Which is the correct ITR? The next question, which is the correct ITR for filing the income of a resident welfare association? Sir, in my view, if the resident welfare, for a resident welfare association, there can be 2 categories of incomes. One, an income which is exempt under the principle of mutuality. Another income which is arising from third-party sources, which is not exempt under the principle of mutuality. For example, all the members contribute to the corpus of the resident welfare association. That resident welfare association utilizes the amount collected for the amenities which is provided, like underground parking, cleaning charges of the common area, water charges that are being collected. All that corpus amount collected would form part of the principle of mutuality. So to that extent, you need not file an ITR itself. But for a resident welfare association, if it has put its surplus in a savings bank account or in a fixed deposit, and it is earning interest income from a bank, then that interest income is not exempt under the principle of mutuality. So to that extent, that income will suffer taxation at the rate of MMR. So for that, the correct ITR form is ITR 5, because the Resident Welfare Association is an AOP in my view, and has had to the ITR, respective ITR is ITR 5. There is a view that a Resident Welfare Association takes the charge, takes the color of the beneficiaries. I would not subscribe to that view. It is only a trust which takes the color of the beneficiaries. The Resident Welfare Association is taxed as AOP, and hence it should be ITR 5, which is applicable to a Resident Welfare Association. Whether an ESI contribution added, the next question is whether an ESI contribution added under 143(1)(a) based on tax audit report information be challenged by an assessee as a mistake apparent on record and 154 application be filed. Yes, sir, you are 100% right in saying that it is a mistake apparent on record, because it is only a normal disclosure that is given in an audit report. The auditor has not expressed his opinion by stating that there is a disallowance. So it is a mistake apparent on record. You can challenge it under 154, but there is every possibility, now that everything has gone online, there is every possibility that CPC can say that this 154 need not be corrected. So the best option would be to file an appeal under 246(a), but you can still say that it is a mistake apparent on record and it is liable for correction under 154. So to that extent, you're right, sir. I think I've answered all my queries.
Wait, 1 second. Deepak cannot ask question in the Q&A because he's a panelist. So he also wants to ask one. Yeah, Deepak, unmute. Yeah.
Yes, sir. Thank you. Sir, regarding the, just before question on the Resident Welfare Association, where like you are of the opinion that it has to be taxed as AOP,
Correct.
then the slab rate will also be applicable or directly?
AOP taxation will depend upon whether the share is determinate or indeterminate. In my personal view, the share generally, if at all there is no determinate share, it would still be treated as a indeterminate share. Indeterminate share will attract MMR. If it is a determinate share, who has got what amount of share? If it is determinate, then you will have to see whether individual beneficiaries are liable to tax or not. If they are liable, then you again have the tax rate. Otherwise, so all that AOP taxation will come. There is an old circular also where it says that for any charitable entity or a non-profit entity, if the share is not mentioned in the trust deed, then it does not mean that it is indeterminate. It is also deemed to be a determinate case, and then slab rates are applicable. That is how every charitable entity will have the slab rates applicable to it if the maximum income of a charitable entity did not exceed 2.5 lakh. Then even though it loses exemption under 11, it will not be liable for taxation. Be that as it may, to answer your question, yes, you will have to look at the AOP taxation. If the share is indeterminate, MMR. If the share is determinate, the slab rates.
Thank you, sir. Thank you so much.
Thank you. Thank you very much, Chaitanya. Very beautifully explained. As if so far we were only worried about the act. Now we have to start worrying about the forms also. And gone are the days where we used to, in fact, most of my generation, we have the habit of taking a pen and crossing the entire form and writing it as not applicable and just dumping the return and no one bothered. But now the days are different. Excellent presentation. Frankly, you have tried to cover each and everything what is important. And I'm sure all the listeners, we had 100 listeners so far till you touch the trust and all. And I don't know, the moment question answers comes, the audience start disappearing. Maybe because of the IPL is also one of the reason. But TK, it was very good thing. All the questions have been answered by you beautifully. And thank you. I can only say thank you very, very much, Chaitanya. And I'll also not only thank you like this, but also I'll have this virtual thank you to you also. And I'm sure you'll be a regular speaker in all Hyderabad meetings in years to come. So thank you very much.
I also recognize the presence of Naresh sir. In fact, a lot of opportunities. I am grateful to him.
So your branch ex officio member is here. He will give the closing remarks and then Deepak will go on.
Thank you, Chairman, for giving me the opportunity. In fact, Pankaj called me in the beginning, so he wanted me to start from the beginning, but I was out of home. So I could not join at that point of time. So now since I've come, it's nice of him to add me back. Actually, Chairman and all the members, Chaitanya has been a very good speaker. He spoke about ICDS and a lot of other topics which I've heard in Tirupati and other branches. Chaitanya, actually, I wanted to invite you for branches, various branches, but because it was not tax audit season, I could not call you. Now that tax audit season is come and all that, so I will definitely be interacting. In fact, I was talking to SRC chairman that we wanted to have a tax audit program for 4-5 days across South India for three branches together. So probably I should start working out on that. We're trying to list out topics and speakers. So you are definitely going to be one of those speakers where we call for 2 hours or 3 hours topics. In fact, it's a detailed, a wonderful presentation from you. And thank you, Chairman, for giving the chance. And congrats to all the participants for active participation and interaction. Thank you, Chairman.
Okay, Deepak.
Yes, sir. Thank you, Naresh, sir. Chaitanya, sir, you were simply superb and have provided all the relevant clarification to all the members. Your presentation was simply the best, and you have been answering very practically and speaking with heart for almost non-stop for almost 2 hours plus. You were like AP Sampark Kranti Express, the fastest train from Hyderabad to Tirupati. I, on behalf of entire managing committee of Hyderabad branch of SIRC of ICI, gracefully thank CA E. Chaitanya from Tirupati for his excellent presentation and addressing to Hyderabad branch members. I also thank Prasanna Kumar sir for his inaugural address, the Central Council member and Central Council member Dayaniva sir. Sir, anything, Pankaj sir?
Just many people are asking Chaitanya's mobile number and email ID. Chaitanya can just type it in a chat by the time Deepak does it.
Yes, sir. I heartfully thank our Central Council members, CA Dayaniva Sharma sir and Prasanna Kumar sir, and Regional Council member Naresh Gildi sir for their words of wisdom for today's seminar. I also thank 100+ participants who have very gracefully attended the today's seminar and got the knowledge sharing from our speaker of the day. I request you to kindly join us tomorrow for our centennial celebration program 96 to 100 on a sticky wicket. Tomorrow, the topic is it's on facing the faceless assessments, wherein Srimati Shushma Chawla, VP ITAT, will be addressing the inaugural address, and Mr. G. Shekhar, Central Council member, will be the technical speaker for the session. I request you to kindly join us and honor the managing committee. Thank you, sir. Till that time, take care. Shubhratri.
Thank you. Thank you, everyone. Thank you, Chaitanya. We'll be in touch. I think your mobile number and email is given for everyone. To all, I'll just copy and put it to all participants. 1 second. I'm just putting it. 1 second, sir. All panelists and attendees. Yes. Hope you're comfortable, Chaitanya, for during the presentation.
Absolutely, sir. It was all very comfortable, sir.
But you're talking beautifully. You did not drop even 1 second. The intensity was there, and really, I'm very, very impressed by you.
Thank you.
Thank you very much for joining. Thank you.
Thank you, Pankaj sir. Good night. Good night, sir.